All right, so let's jump into some simplicity approach. This time it's going to be all the way up to entry. So we're finally going to finish off the simplicity approach. That means we've got our build up, inducement, relevant break of structure, mitigation, smart money trap, timing, entry helper, and then of course the last step, the entries themselves. So let's jump in. Obviously, you guys are going to know the first step by now. We've repeated it so many times, right? The build up. This is always going to be your first step. Can't stress this enough. This needs to be the one that if you can't identify your build up, you wait until you can. There's no reason to rush and try and get into these trades. No, you need to wait for identifying your build up. Once you identify your build up, that's where everything sort of clicks into place. That's why we get you to repeat the build up task so much, because we want you to just get it down, because in all honesty, if you are seeing the build ups right, everything else will fall into place and everything else will be like so much easier. So let's go into the build ups. Obviously, we're going to have some smaller ones. So obviously we have our first little channel. Wonder what that will be. And then boom. You guys should be noticing some things like that. Noticing some things like, for example, what do we get when we see our inducement? Okay, and then we have a bit of a bigger channel built up here. Yeah, little possible inducement high, low. Again, look at this. What are we doing? Faking. Oh yeah, this will hold. Same with this. We give this, you can even draw it like this. Boom. And then this overall channel, you can see. Lovely. And then we take this build up. And you'll also see later on when I show you the higher time frame, this will be something. And then again, look at this. This will make more sense when we look at the higher time frame, but look at how they always fake the liquidity. Oh yeah, it holds, gives the reaction away, possible smart money trap. Yeah, all makes sense. So obviously we can look at our timings as well. Now, what is the next step? We've identified our build-ups. This all makes sense. We could probably add a few more in if we wanted to, like within Asia, but there's not much point adding, like, you know, this one here within Asia. I know we did in the past, but obviously you've got build up, inducement low, break of structure high, mitigation, trade away. There are of course cycles in Asia, but let's not get into them. We want you to trade the not easier, but the better ones, because there's more volatility. And yeah, so we want you to trade those timings like London, New York, those sort of timings. So after we've identified our build-ups, the next thing to do is identify our inducements. So this should make a lot of sense. Obviously we have build up, so you know, bearish channel. What are these right here? Vector candles, inducement low. Okay, and then mitigation into another build up into inducement high. What is this? Vector candles. And what kind of timing is this? Possibly even to the minute. Okay, we like that. And we can see, okay, we've got liquidity down here. Maybe there's a potential trade within here or here that we could take, but we'll go into that a little bit later. And then again, do we expect this to hold? Do we expect this to be a real reaction or just a fake reaction? We obviously expect a fake reaction. And then again, we go into another lovely little build up, induce high. Again, no real trade here, especially because you'd sort of have to guess where the inducement's ending, which is obviously not ideal. This isn't really a scenario where you want to take like an inducement trade of this little thing right here. Maybe if it does something like this, you can take it. And then again, we can see we induce this bigger channel to the top side, again, giving build up. And then we have something on the higher time frame that I'll show you. What are these? What is this? Yeah, vector candles into the inducement. Love it. Ooh, price comes back, gives the mitigation, and then away we go. Obviously, again, faking the double top, giving the reaction away, inducing high. Yeah, so we understand all of this. So what is next? Your breaks of structure. So let's go into that. Again, this one is optional, as sometimes it happens late. I'll show you with this one, it happens late a fair bit. So here you've got inducement high, break of structure low. Why do we know that, oh, this right here isn't the inducement and we're going to go higher? Well, that's because we've got this liquidity here. This is just going to be a false reaction, SMT, and we've also got higher time frame liquidity here. So this is our true break of structure. Again, as you can see, it's a bit tricky because nothing really comes of it. There's no real way to use this break of structure to be like, okay, I'm going to enter sells, because it never really comes back, but that's fine. And then again, after we have this inducement low, we have this break of structure high. Again, high time from inducement to the left, New York trap time, vector candles, so we know, okay, this is likely our inducement to trade away from now, and that is what we're going to do. Again, you can see that this one here gives a nice little pullback. You'd be trading the SMT here. This is tradable. I mean, personally, I don't, but you can trade this. You just have to acknowledge that, okay, I am trading the SMT. I'm only really trading the pullback, so I do need to get out at some kind of mitigation zone around here. And then again, we're getting to end of day, so we don't really trade this, but we understand, okay, we've had an inducement, we can expect a bit of a pullback, even though this is our higher time frame inducement. All right, next. We have, of course, our mitigation. So let's go into this. Again, we have, so our mitigation is always going to come after we've identified our build-up, our inducement, and the break of structure if you want to use that. If not, it's just going to be after you've had your build-up inducement. So here we have had build-up, inducement, mitigation. Yeah, and then we have had, build-up, inducement, and then mitigation. I think on the M1, I believe. But again, we'll use this point. And then exactly the same again, build up, inducement, mitigation. Wow, what a surprise. Exact same thing, build up, inducement, and we're also inducing this bigger channel right here. Okay, so we've induced that. Ideally, we come back, we get our mitigation. You can see why waiting for your breaks of structure can cause you to miss out on quite a few trades, but that is fine, especially at the beginning. You want to be able to catch things with, good confidence. You don't want to be taking these random inducement trades and thinking like, oh yeah, right here, this is an inducement, we buy, or, right here, this is an inducement, and then, oh yeah, we're going to sell back all the way down. Like, you don't want to be thinking like this. You want, especially at the beginning, you want to be catching your really confirmed trades, no real worries. So here, you've got your inducement, you've got your build up, your overall build up as well, your little build up, inducement low, also inducing higher time frame to the left, price pulls up, comes into this SMT, pulls back into this mitigation, boom. Where are you targeting? At least here, if not here. Nice and simple New York trap cup trades that we've learned now. So we should be able to recognize those as well. So after we identify our potential mitigations, what do we want to identify next? Of course, we want to identify the smart money traps. So let's just go through them logically. This one here, smart money trap. But why? I'll give you a few seconds to think about that one. Same with this one. This is going to not be something that you take. It's a smart money trap. But why? Same here. This one's a smart money trap. But why? So is this one. And this one here. All right, so let's go over them. This one's going to be a smart money trap because it lies at equal lows plus Asia low. So from here, we can expect a bit of a reaction, induce high and continue lower. This is exactly the same. We have had an inducement high that we're trading away from. So now, and this is very clean with strong vector candles, nice inducement high, liquidity lower. So this becomes a smart money trap because it's against the inducement and it is lying on liquidity, as we've had our break of stock, quote unquote. This is our choch, and then this becomes the buy zone. Obviously that gets completely smoked because we know, okay, we've had our vector inducement of Asia high. We know that realistically our targets are going to become Asia low. Right, that makes sense. Which one's next? This one right here. Again, higher time frame inducement, New York trap. It's a cup trade as well. We've had cycle complete to the downside. So this is going to be the SMT. Likely the majority of these will become SMTs now. You need to look at the next day, but we've had a higher time frame inducement. So whilst these can give reactions, it will just be pullbacks. Okay, that should make sense. So what is next after SMT? We have timing. So let's go into timing. Oh, what a surprise. London Open. What have we learned? The ideal situation for the relationship between New York Open and New York Trap is, it's that New York Open gives the false move, and then New York Trap induces something to the left and reverses against New York Open. That's exactly what we have here, right? And this all makes sense. We have our build up. We induce the build up high and our mini build up that we induce high. And then we come down, induce to the downside, induce the higher time frame, New York Trap, give our New York Trap cup trade. And then again, we trade upwards away from the overall inducement. Same here, we are at this point here, we are trading away from our London Open inducement that is at that point the main inducement for the day. So our last confluence, again, remember that the entry helper is always, I cannot stress this enough, the entry helper is always going to be the final confluence. You can't be using the entry helper before you've identified your build up, your inducement and your mitigation. That is absolutely paramount. The entry helper needs to be the last confluence. So let's have a look at what we have for the entry helper. So we have M1 let here, okay, away from our overall inducement. So potentially there's something in here. And then again, we have an M5 let, again, away from our overall inducement. Then we come down into New York Trap and we give the perfect M1 let followed by an M5 let away from the inducement. Okay, so now using this, I'm sure you can understand that we're about to have some of our entry approaches. But before that, we need to look at something. And that's this. So this is the H1 time frame. As you can see, we have built liquidity here through equal lows and here. Yeah. Again, they're not perfect equal lows, but they're relative equal lows. And then you see we come down and we vector through it all. What timing is this? Look, we even give the illusion, oh yeah, it holds, it holds, it holds. Boom. Vector down, New York Trap timing. Okay, so we can maybe, this is our medium inducement, and we can maybe expect to trade away from it for a while. So let's dig into the entries themselves. All right, so we've got quite a lot going on here. So let's first point out the higher time frame. We're going to sort of have to go in between here and the entry helper slide. So just bear with me. This is our higher time frame liquidity. This is our false reaction away from it. Build up, inducement high, New York open, trade away, then New York trap reverses it, right? So let's have a little look at the entries themselves. So first off, we identify that we have had an inducement high with vector candles at New York trap timing. Then we also at New York trap, sorry, at London open timing. So we know that we should be trading away from this. After we've had our inducement, what do we look for first on the entry helper? Let then EDM, right? So at the end of London open, we get this let that mitigates this M1 POI. And to be safe, I would put my SL above here, but if you want to be aggressive, you can obviously put your SL there. Now, we continue down. We have a little mini cycle up high, but there's no clean mitigation, and we don't come back and mitigate the inducement. So no entry here. That's fine. Then same thing happens. We create a false reaction from the higher time frame liquidity, react away, induce the overall channel to the downside. So that's like our larger channel. That's why it's in blue. Induce our overall channel to the downside at New York open. We know that we're still trading away from this inducement, but we're building liquidity here with the stuff on the left. Yeah. So we trade away again. There was nothing clean. Potentially you could take this as the Asia low bounce, but ideally you would want another clean re-entry like this. Let me show you. This is definitely something that you could take, but ideally you want a clean re-entry like that. Yeah. Maybe this is also like a let or like an EDM from this point would be perfect. Okay. So now we know New York open, we've induced to the high side. Now in New York trap time, we're inducing that higher time liquidity, especially after we've given the reaction away from it. Okay, so then we see on our M1, we give our BOS, and then we come back to mitigate the M5. In all honesty, I'd take this off the M5. Especially this first one, I'd take it off the M5, and I wouldn't even take the demand candle itself. I would take the actual like imbalance zone. So take the imbalance fill, because for these cup trades, you always want to give yourself like the best opportunity to get in. Obviously, if you did go down to M1 and take the demand candle, you'd be fine as well. But in this case, I'd like to choose the best opportunity to be in. So I actually think it's like, it would be like this. That's like the M5 imbalance, like that. And then, so that was our M1 let, if you remember that first one. There you go. That is our M1 let. And then with the mitigation of the M1 let, we actually have an M5 let as well. As you can see, boom. Yeah. So these could be your two entries. You can take both. You can just take one. The one thing you do have to be a little bit careful of is we do technically have this imbalance lower that I don't think that hasn't been filled. So you may get a little bit of shaky hands with this one, but if you're up for the risk, then obviously there's nothing wrong with taking them both, especially if you got into this one at the start of the day. If you got into that one at the start of the day, then I'd recommend taking both. If maybe you didn't, then just take the first one or the second one. Maybe don't take both All right, so let's jump into AU on the 20th of July. So as always, our first step is going to be the build up. So let's get these build ups done. Just looking at this, we also sort of missed one here, but let's go through it. So obviously we don't trade Asia, but no problem just going through it, because you know, when you trade in the eyes, there's nothing wrong with that. Again, so obviously we have our up channel into what vectors to the downside, come down, mitigate, okay, and then again coming out of the end of Asia right here, we have our channel into vectors to the downside, into our mitigation, and then obviously price creates equal highs. Where are we likely going to come to? Asia high, we leave equal lows right here, that's for later on, and then again same stuff, build up, that's not a very good straight line, but you know what I mean, build up, inducement high, to then trade away. Little note, when do we think this inducement is? And then exactly the same stuff, right? We have our liquidity here, so we're going to come down and take that. We take the liquidity, so obviously we have a pullback, but we know that our overall target is not met. This is our overall target. You can see price comes, creates equal lows. What do I speak about all the time? Faking the reaction. Oh, it holds, it holds, it holds. It obviously holds until it doesn't. Perfect. Let me just remove some of these. So obviously it holds until it doesn't. And then we have our inducement high within what timing exactly. And then London close comes back, mitigates this position. And then we obviously give these build-ups as well, but it's end of day consolidation. So we don't really expect to do too much with these. So let's go on to the inducements. Again, this is the last impulse to stop out retailers, or the last impulse to make retailers open their positions. Obviously, ideally it does both, and then we always want to see it followed with some vector candles. So let's look at our inducements. We've missed one. So inducement low, price trades away, and then we obviously come out of Asia, Asia high and low, go into our build up, vector down, inducement low. Again, where's the target? The next liquidity point, Asia high. We fake out this reaction here. Oh yeah, Asia high is going to hold. It's going to hold. There we go. Inducement high within what timing? And then we come down, take out this liquidity, but we know, okay, we've built lots of liquidity here. So we should continue to take out Asia low overall, especially when we've built liquidity high like this, induced high. So now it makes sense for us to come down and induce low, and this is the most sensible point. Again, we give a reaction from Asia low. So at this point, it's pretty much confirmed. Okay, we're coming for at least Asia low, faking out the reaction, and then boom, inducing Asia low and the equal lows with good speed in what? New York Open. And then we see, okay, 1, 2, 3. So we build the triple top, fake the reaction away. Okay, lovely, lovely. Into New York trap time, come to the top side, induce higher. Where are we trading away from? Our overall inducement up here. Okay, so we trade down, and then again, London close mitigates, build up, inducement low, and then obviously we induce high, and then go into another build up. But we don't really need to focus on this bit too much, because again, end of day, right? So we've got our build ups and our inducements. What is next? Well, next up we have our, this is obviously the only optional step, which is the break of structure. So again, you'll notice a fair bit that this does happen late. and sometimes it's difficult to differentiate between the inducement and the break of structure. So what you want to be doing is you want to be identifying your inducement. So let's say, oh yeah, I've had an inducement low. Let's draw this out. Okay, build it equals. Right, we've had an inducement low, and then okay, this point's my break of structure. Come back down, mitigate, fly. That is the basic idea. So again, exactly the same. Build up, we identified the inducement low. This is the low. This is the high that caused that low. So that's our break of structure. And then within here, you have your M5 mitigation point. Again, same with this. This is why sometimes waiting for the break of structure can be a little bit iffy. So again, build up, inducement high. This is the high, this is the low that caused the high, break of structure, and then you see ideally we get this mitigation. Same here, so build up, faking the reaction, This is the high that caused the low, break of structure, and the issue here is normally we'd want, oh yeah, this mitigation, but by the time price comes back to this mitigation, we've already had another build up with inducement high in trap time, so we need to be very careful of this mitigation. Okay, so those are our breaks of structure. So obviously what is next? It's going to be our mitigations. So this is how we're going to be, or this is one of the ways that we will be entering trades. So let's go over that. So we have build up, inducement into our mitigation. Realistically, this is maybe not something that you'd be taking because it's close to Asia low. You might be worried like, oh, this is liquidity. But then obviously we have our break structure. We see, okay, we should be aiming for this. So potentially this mitigation is something that you can take. Then again, build up, inducement high, obviously fake the reaction. Break of structure, this becomes our mitigation zone. Then same thing, build up, inducement low, break of structure, mitigation. Build up, inducement high, break of structure, mitigation. Yeah. And you see how it always comes with a liquidity buildup. So right here, we don't have a liquidity buildup. So we don't really need to be too worried about, oh, you know, this is going to cause this, as it's just boom. Yeah. Whereas here, we have clear liquidity buildup, clear inducement. So now we need to be careful of this mitigation right here. All right. So after mitigation, we have smart money trap. Now this is important. You can trade smart money traps under like certain circumstances, but especially at the beginning, you don't really want to be. You want to just be, you know, fine, I'll let it do its thing, I'll let it react, because also sometimes we might get an FFS, but you know, I'll let it do its thing, I'll let it react. I'm not going to try to trade these at the moment. Yeah. But when you do have like proper lit cycles going into them, you can get reactions and stuff like this. But if you are going to trade smart money traps, you have to understand that you can't aim for the moon. You're obviously going to be aiming for like just a pullback into like a mitigation, or even like a pullback to take like some minor liquidity. So let's look at our smart money traps. So this should all make sense. We obviously have Asia high. We expect that to be a smart money trap. And then of course, especially considering we've got the build up, and the build up is within the Asia high like mitigation as well. So we definitely expect a fake reaction from here and then to continue higher. The difference with this one here is we have our build up and then we have our vector candles out of it. And you wouldn't necessarily take a trade right off this, but obviously this is fine. And then again, we've induced high, so we're not going to want to take a mitigation off of this liquidity. So this is going to become a smart money trap. And then same with this, equal lows, false reaction. Is this really a mitigation that we want to take? No. Like 9 out of 10 times this mitigation will, even more than that, like 99 out of 100 times this mitigation will not last. And then same here, we have our build up, we have our inducement low, our inducement high, sorry. So is this mitigation something that we want to take now? Probably not. Same thing applies here. So, you know, this, would we want to take this? No, because we've had build up, false reaction, inducement low. Now we expect to grab some liquidity to the top side. So that's our SMT. What is next? Timing. So obviously you don't want to be just, things can happen outside of timing, and they do happen outside of timing, but you want to use timing as like a compass, like a guide. You don't want to be so strict with it, like, oh, I have all of the confluences that I want except timing, so I'm not going to take the trade. That's not really what you want to be doing. But at the same time, if you get your inducements within timing, then of course that is, you know, it goes without saying, that is better, right? So let's look at the timing. So build up, inducement, all mitigation, so lit cycle. So let me just put cycle. So that's cycle complete in Frankfurt. So now we know, okay, we should grab some liquidity to the top side. We obviously also can get in on this mitigation. And then you've got obviously your inducement high. Again, it's not within timing, that's going to happen. And then we have this nice little play, and this is like a really nice little like ping pong bit, because what you have is you have your build up, your false reaction up, then probably some kind of mitigation within here. Where are you going to trade this mitigation down to? The liquidity, yeah. And then you notice, okay, I've had an inducement low within New York Open, so now I'm expecting price to give a pullback, right? Price to pullback. But the question is to where? And what we see is we have our liquidity build up. You see how they fake the reaction right before New York trap. Okay, so now we know, okay, if we're in any buys here, we're like at this point here where price gives its pullback, we know, okay, this becomes our target. So that's where you target your buys. And then obviously we have our inducement high, New York, during New York trap, to continue away from the main inducement for the day. And then price provides another pullback to mitigate during London close. Perfect. Take that, continue down, where to? Just to create a new low. So that's using timing to our advantage and sort of framing the day through timing, right? So let's go to the next one. And this is obviously our last confluence, which is going to be the entry helper. So let's look at what we have for our entry helper. Well, first off, from our false reaction, we see that this provides, I don't know why I've drawn that line twice. We see that this provides an EDM, right? An M1 EDM. So there's almost definitely a mitigation here that we can take to trade down into this. This point here was also an M5 let, right? So it's all coming together. We can see we've had our inducement, and then we have our let plus EDM right here. And then we come down and we induce to the downside, right? We induce these equal lows to the downside. And within this right here, after our inducement, we have our inducement followed by our M1 let to take the pullback buys up to take this liquidity. Yeah. And then finally, for London close, we have our EDM for the overall continuation of this inducement move, right? trading away from that main inducement. Perfect. Then we have a let right here. But with this one, it's late in the day. This probably isn't something that I would like jump into, right? It's quite late in the day. Realistically, you either get in at like London close. I wouldn't really want to be entering at like, this is like 6:30. So not ideal conditions to enter. Okay. So now let's put all of that together and let's show the entries themselves. Okay, perfect. So let's go over them. We have our build up, our inducement. This is for our first trade of the day, right? We're trading into the overall inducement for the day. So we have our build up, inducement, mitigation. Okay, we don't really want to take this mitigation, right? Because who says, oh yeah, we'll just come for Asia low, you know, this is not really a trade that I would take. So what you can do is you can wait for your more confluences. Okay, we're building liquidity here, we're building liquidity here. We have inducement to the downside into this M5 zone. You can refine that to the M1, and then this is something that we could take. Even if you didn't like this, right? And you see, again, another build up within this zone, inducement at what timing? MM1. So then you could even get in on the mitigation of that right there. Take that. I'd still recommend putting your stop loss below the original zone, just to be safe, especially in situations like this. In all honesty, if you saw it building like this, I wouldn't blame you if you didn't want to enter this and you just said, okay, you know, that's not a trade for me. It's a little bit too risky for me. Completely fine, right? And then we have our build up, false reaction away, equal highs, inducement high, and unfortunately, no clean entry within this. Ideally, we get like a pullback to here. That would have been a very nice trade, but nothing happens. That's just a straight inducement trade. Next up, we have this one. So like I said, they show the liquidity first, give you the false reaction. And in this case, you're actually trading alongside this inducement, but also trading into your suspected inducement, right? So what we can see here is we have the very clean mitigation. And if we just go back, we will remember that this point here was an M5 let and an M1 EDM, right? So we've got double confirmation, double entry helper confirmation for that specific trade. Okay, so yeah, then we come down, take out our equal lows, even fake the reaction one more time. Oh yeah, it's gonna hold, and then obviously it doesn't. Then we induce low. So now we've had our inducement. What do we look for after our inducement? And that is the approach 3, which is obviously our let right here, our M1 let. So that comes, and again, you'll see that I much prefer to take the actual demand or supply candle rather than this like imbalance candle. Even though you can see like, oh yeah, it's tagged in either way, I will pretty much always take this demand candle. And again, where do we know where to target? Well, we know that we should probably take some liquidity high, and then when we see, okay, 1, 2, false reaction, come back up, we know, okay, that's going to be our target. We take that. We're in New York trap time as well, so we expect inducement high after our liquidity build up into continuation lower, trading away from our overall inducement, right? So we're trading away from our overall inducement. We create a new low. That's our break of structure to the downside. And then, because you can see you see there's no liquidity buildup for this one. So that's our break of structure to the downside. And then we've got London close provides the mitigation. Obviously, this is really, really big. So if you're taking like from here to here, that's like your 1 to 3, so it's probably not worth it. So if you then want to go and refine that down, go down into the M1, as you can see, that would be your, so this is your reaction from, like this would be the reaction from the M5 zone, and then you go down, get in on the imbalance fill for London close and target this low. As we can see, that is, yeah, that is the simplicity approach for AU on the 20th of July. Okay, so let's jump into this one. EJ on the 12th of July 2022. Obviously, as always, this is going to be our M5 time frame. So let's jump right into it. What's the first thing that we're always going to look for? It's going to be our build-ups. I know there's going to be a lot of repetition, especially because we're going to go through quite a few simplicity approaches, but it's good because it builds up that it really helps you with the first step, which is identifying the build-up. If you can consistently do that well, then all the other steps will just kind of fall in line. And if you're at a point on the charts where like you say, okay, I can't really identify the build up here, then just wait until you can. Don't try and force things without being able to identify the build up. Okay, so first things first, we're obviously going to identify the build ups. So we should be quite good at this by now. We've gone over this a lot. So obviously we have the equal lows at Asia low, the uptrend, and then also this uptrend. Boom. What do we see here? Nice vector candles, and then again we've got our build up to the downside with again completed by nice vector candles, and then another little build up, induce high, induce low, final channel upwards into inducing high, and then obviously our end of day consolidation that we expect, building liquidity for the next day. Perfect. So let's look at how these were induced. Right, so with this upwards channel, we obviously induce it to the high side first, come down, induce to the low side, and then go into another little build up where we induce to the high side, mitigate Asia. Again, this can be a little confusing, but again, this is EJ, so we know that inducements in Asia have a little more impact, so we do need to obviously bear that in mind. And then again, build up low, induce the downside, pull back, potential EDM within here to continue lower. And then what do we see here? After we have our downwards channel, we have, of course, our vector candle signaling, okay, this is potentially where the inducement is going to end. After that, we get our break of structure into mitigation. Love to see that. And then again, same thing, right? We've got liquidity up here. We come up, induce with what? Vector candles, go into another little build up, push back up, potential mitigation within here to continue lower, mitigate this inducement in New York chap time with vectors, give quite a few mitigations, even mitigation at what timing, London close, before pushing higher, grabbing all of this liquidity, getting towards the end of the day and giving our final consolidation for the day. So that is our build-ups and our inducements. All of this should make sense. Next, we obviously have our relevant breaks of structure. So here we obviously have, after we induce high, lots of vector candles in Frankfurt, mitigate. Again, we know it's EJ, so Asia can have more of an impact on EJ as it's a JPY pair. So any inducement from the left will make sense if we trade away from it. And then obviously go into another little build up, induce low, BOS high, come back down, mitigate, before obviously giving another inducement high of this liquidity that we built up again with vector candles, before going into another little build up, no relevant break of structure, into mitigation and continue higher. So that should all make a lot of sense as well. Next up, we have our mitigations. So let's just think about this logically, right? We have an inducement high of this, but then we come down, we show our liquidity right here. Boom. So once we induce this level, we have to be a lot more careful of this mitigation right here. And then same with this, we give an inducement low. This is our mitigation, but once we've had this inducement high, we again need to be careful with this mitigation. We had this inducement high, so this is a valid mitigation, but once we've come low, induce low, then yeah, things get a little bit not worrying. I think worrying is the wrong word, but things get a little bit concerning maybe with this mitigation. We need to potentially see like some build up underneath it before coming in and mitigating. And then again, we have our build up into inducement low. So we can then have this mitigation, and then you might think, oh, but we induced high, so why is this mitigation fine? Well, look at what we have within this mitigation. We have our build up into inducement within timing, and there's also something on the left which we will get into a little bit as to why these are nice mitigations. Okay, so next up, after we've had identified our mitigations, we need to identify our potential SMTs. And like I said, right, we need to be careful about these ones. And the reasons why is because we've got an inducement going against them, and there's no immediate liquidity built up to like validate this, right? If that makes sense. We've had the inducement low, so now we expect some kind of inducement high. Where's the first point that could happen? Right here. And then same with this, we've had extreme vector candles high, so we need to automatically be wary of this right here, especially knowing that we're in London Open, so we are going to want to induce, and we've got this liquidity resting here. So this obviously becomes the ideal target. That's like the target. And then you can see, again, we go on about this a lot, faking the reaction, showing you that it's going to hold. Oh yeah, it holds, and then we go into another little build up, induce to the downside, and give our break structure, come down, mitigate, continue higher, right? And then again here, this mitigation is valid because look, we've got our vector candles coming down into it, clean build up into mitigation of the inducement with no liquidity lower. So that's good. All right, next up we have our timing, of course. So as you can see, we get our pullback at MM1 after we've induced this liquidity. This is maybe a bit of a tricky area, and you probably take, like, let's say you get in on this, right? You probably take a break even here if you don't get out with this mitigation, which in all honesty, if you've got this kind of liquidity grab, it would be completely fine to expect a bit higher prices, maybe for us to come and take out all of this liquidity. So this could definitely be a break even. And then again, we've got MM2 mitigating after this inducement, New York trap coming down, mitigating away from the inducement, and then obviously London close mitigating to take out this overall liquidity. So that should all make sense. Now let's have a little look at the entry helper. Okay, so what do we see for the entry helper? Well, on this day, it was a little bit bare, but we can see how it still helps us overall. So here, where we were maybe thinking like, oh, price is going to come and take all this liquidity, we have our anti-confluence. Maybe this isn't enough to get out of the trade, but it should definitely be enough to be like, okay, I should at least go break even on this trade, right? And then after our completed cycle, away from the overall inducement, we have our M5 let trade, multiple in this case. 1, 2, 3. Okay, so let's jump into the entries themselves. Okay, but before we jump into the entries, we need to look at something, and what we need to look at the higher time frame. All right, so first we need to look at how they build the liquidity, right? We've got our equal lows here and our previous day low, no, not previous day low, but a daily low here. And look at the way these get induced. Huge vector candles, right? With any inducement, it doesn't matter the time frame, you always want to see huge vector candles, always. So coming into this day right here, we have Asia low sitting potentially just above some mitigation within here. So let's have a little look. So when we zoom into this, we can see that at the lowest point, this is our final imbalance zone, and it lines up with our final demand zone right here. So what we can do is we can take this zone and bring it to the left, and this could potentially be our entry approach 1. To be honest with you, this is not something that I would play with a limit, especially because it lies on like previous day low. So it's much better to play the reaction, play the build-ups, but have this as like that additional confluence within the intraday. So let's go and see how that looks. So this right here is our overall limit. This is our overall limit. This is our refined zone. This one right here. So from here, yeah, that's our refined zone. So we can see, okay, price taps into that refined zone and then comes up, gives us the break of structure. Price comes back down. That's such an awful drawing. Price comes back down. Mitigates this. In actuality, I'd probably take it like this. As I said, I always like to take like the demand candles, or if I'm selling, the supply candles. So I'll probably take like that. And then we just have to, yeah, and then that's obviously us trading away from this inducement that is also a completed lit cycle. And it makes sense because this POI is from a prior inducement. So this is a nice POI to look at. Doesn't necessarily mean we're going to take a straight limit from it, but still it's a nice POI to look at. Okay, so then in New York, we have this. Let me say, we have this where we have our build up, inducement high into inducement low. This is obviously your potential first trade, like after this one, where you have your M5 let. So if we think about our ideal like play in a sense, it's always we want our cycle, then you want your let trade, then you want your EDM, right? So we've had cycle complete here. Here's our let. Let's just go back and show you that. So there you go. That's our let. And then ideally we would have an EDM, like, you know, maybe up here, right? But that doesn't happen. But what does happen is at the end of New York trap, we know that we're still trading away from this inducement overall because this is our completed lit cycle. So we're trading away from that one overall. And then what we get is we start to build equal lows. We're trading equal highs, sorry, we're trading away. We know that these points are lets as well. And then we just take this mitigation. Again, this is maybe a bit of a risky way to take it. If you want, you can take it, you know, stop loss below here. That's completely fine. All of these are fine, like stop loss below here. Depends how much you want to over refine. You want to refine it. Obviously, the more that you do refine it, the more you're at risk. Yep. And then obviously, where do we target? Well, we target this point right here. Potentially for this one, it would make sense if you just targeted this liquidity. So maybe this could be your target here. And then, especially if you don't feel comfortable knowing that it's going to pull back, you might think like, oh, it might take me out at break even. So either at least partial here, or you can just aim here overall. And then you get, especially when you see the vectors, okay, boom, that's the first one. And then the re-entries here and here. What do we know about wicks? we know that lots of people see these as like strong rejections. So it's going to hold. So we know that there's going to be a lot of stop losses above this. So this makes it prime to target for these longs, especially intraday, where we're sort of coming towards the end of the day, you know, London close. It's like after London close, we know that after this, we're probably going to expect some kind of end of day consolidation. And so we know, okay, this makes sense for a good target. Also right here, it's always nice when they build liquidity in the direction that you're taking the trade, because this basically becomes your break-even point. Okay, let's get the last 2 days of the simplicity approach done. I'm sure you guys are getting a little bit sick of it now, but it's obviously important that we go over and over and over it again, because obviously it's very powerful. Repetition is the way that you learn. So obviously I don't expect you guys just to be repeating it here with me, but also repeating it in your own time. Trust me, just getting this down so that you can get to the point where these build-ups are second nature to you. Everything starts with the build-up. You get the build-up identified, identifying the inducement the inducement normally becomes a piece of cake. Then after you've identified your inducement, relevant breaker structure, mitigation, smart money traps, so you know where to avoid, timing, entry helper, and then it all comes together with the entries themselves. As you can see, this is a really nice day, a really interesting day actually. There's a lot of examples of something that I speak quite a lot about, which is where they will show the liquidity, give a reaction from the liquidity to bring in more people, and this is actually them showing their hand. So let's just jump right in and get into it. I feel like that makes the most sense. So obviously the first step always is going to be our build-ups, right? So let's go over them. They should all make sense. You should all see them. Shouldn't really be an issue. Let's go. So obviously we have sideways channel, equal highs here, also equal lows here, little build up here into another downwards channel here, and then another downwards channel here. This is a false reaction upwards. I'll show you why. And then we go into sort of end of day around London close, but obviously a little bit afterwards as well. We have build up, also build up here, there, like this, sorry, and then the channel down, and obviously also the channel up, choose high, blah, blah, blah. Overall, we just ignore this as that's our end of day consolidation, not really our prime time for us to be looking for any trades anyway. So what is next? The inducement. Let's get right into this. So there's a couple of things that I actually want to point out here, and it's about them, you know, faking the reactions, showing you their hand, stuff like this. And I want to point it out to you. So here, 1, 2, and then we trade away, come back into this, and again trade away. This is obviously at this point a quadruple bottom or whatever you want to call it, so this is for sure going to get smoked. Okay, then again we create double top, not induce, but tap it one more time, faking the reaction. Oh yeah, it holds. Then we go into another build up, induce to the downside. Unfortunately, no clean entry with this one right here. And then what are these? Vector candles, right? Perfect. And what is it doing? Smoking through the liquidity that we previously showed. Oh yeah, it holds, gets smoked, right? And then obviously this no longer becomes a valid mitigation. And then here we have no real liquidity buildup. So we have no real liquidity buildup. And then again, we come back and mitigate the inducement to continue lower. And again, mitigate at MM1, to continue even lower. Obviously we go into another little build up, induce high, again build up, fake reaction will go into Y, induce high, induce low, and then obviously end of day consolidation. But still we can understand, even though there's less volatility, we induce the build up low, we induce the build up high, and then you go into another little build up and induce that low and then continue higher. Right, so we should have a pretty good understanding of this. Obviously also these points here and here lie on Asia high and low, so when we see the breakout of this, people are triggered into their buy stops, breakout of this, people are triggered into their sell stops. So what is the next, blanked out. What is the next point? Is obviously going to be our breaks of structure. Now again, this can get a little bit confusing, and that's why it's optional, because often these will either happen late or you'll identify it as a break of structure and it's actually an inducement. So you always want to look for your breaks of structure after the inducement. Okay, that's why we've got it after the inducement, right? So again, you can see we don't really expect this to be a break of structure and we don't expect this to be a break of structure. Why? Liquidity, right? So no breaks of structure there. Then, okay, we have follow through after this. Here could definitely be a break of structure. And then you see in London Open, we come back up and mitigate the inducement. Perfect. And then our next break of structure is after we've had this huge vector candle to the downside, also induces something on the left on the higher time frame. That's our break of structure. But again, you can see after this has happened, intraday, the move has already happened. Okay. Next point is going to be our mitigations. So we're pretty much going to look for mitigations after we've had our inducements. And then obviously if we have a mitigation, a mitigation point that we think is good, and then we have like a significant inducement to the other side, it's going to weaken the possibility of that inducement. I'll show you exactly what, that mitigation. I'll show you exactly what I mean. This one here, right? So we induce to the downside, lovely, begin to trade away, vector up, take this right here. So this is our inducement that we're trading away from, and that makes this less and less comfortable to take, right? And something that you shouldn't really take. So let's go over it. First off, we have our mitigation from this inducement, then we induce low, potential mitigation here, but then we induce high, so our potential mitigation here. Again, not a inducement, no liquidity buildup. That's how we always have to start. If you ever get lost on the charts, you wait until you can identify the liquidity build up, and then you go from there. Same here, we're just carrying on with the order flow away from the overall inducement, and then we go build up, inducement high, mitigation. Obviously there's no imbalance in this one, it's just a mitigation of the demand candle. And then here we have build up, inducement of the build up, that's also a mitigation. That's our lit cycle to trade into the overall inducement. This would be the most ideal play. Doesn't come, nothing we can do about that, right? And then again, build up, inducement low, mitigation, and then obviously again build up, inducement high, also taking out this over here, mitigation, build up, inducement low, mitigation, trade away. Obviously this is end of day consolidation, so we're likely to not really touch it. All right, after our mitigations, what is next? The zones that we don't want to look at, right? So let's go into them. Our smart money traps. So like we spoke about, this is originally valid mitigation until we induce high. Once we induce high, this becomes a smart money trap. As obviously we're also going to see that structural traders will see this as their break of structure, and also we know that any people who are buying this breakout, their stop losses are likely here. So we have limits here, and we have limits, and we have people who are already in their trades with their stop losses underneath here. So that's just going to become a normal, that's going to become an SMT. And again, these ones are the same because we've got no liquidity buildup, obviously there, induce that to the high side. Remember, the best way to draw these is to take your tool, like your straight line tool on TradingView, copy and paste it to the other side, and then you've got your parallel channel, and then you can know, okay, this stayed obviously within the channel, this induced it to the high side, and then again we're just trading away from that. And then this will also be an SMT because of this inducement here. I'll show you that. And then obviously same with this, as we're now looking to take liquidity to the top side. Perfect. What is next? Timing. So as we can see, we have our vectors within Frankfurt Open. Obviously, ideal scenario is that this is actually London Open, but again, we need to understand the overall play. If it's off, you know, if timing isn't always perfect, that's how it's going to be. You're not always going to get those ideal timing situations. So you sort of have to not live and learn, but you have to, if everything else is there, then the fact that timing isn't there should not put you off. Next, obviously, we have our London Open and MM1 mitigations away from the overall inducement. Obviously, normally we'd get something like, okay, London Open does the inducement, MM1 and MM2 continue that, and then we get our New York trap reversal. That would be like our ideal like lit cycle. That's not always how it is, and we have to adapt. Okay, perfect. Next up, we have our entry helper, the final confluence, not the first, not the third, not a middle confluence, the last one. And this is really important. You want to be looking at your entry helper after you have your completed lit cycle or a very obvious inducement that you're trading away from. You don't just want to randomly pick points on the entry helper and be like, this is an M5 let, we're going to go up from here. That's not really what you want to be doing. Same with like EDM. You can use it as like anti-confluence, but again, the best thing to do is to, at least in my opinion, is to close the entry helper. So on TradingView, if you double click just the screen, it will close your indicator box, and then when you have your lit cycle, you can double click again, open up the indicator, and then you can look, okay, this aligns with this, I can take this in this direction, that sort of stuff. You don't just want to be randomly using your entry helper. So let's look at where we have the entry helper. So again, this is our overall inducement that we're trading away from. Here we have, again, an inducement in the same direction, and then we mitigate the M1 demand candle. It's a big demand candle. And then again, we have build up, inducement high. We know that this is a false reaction from what's happening on the left. We know in this scenario, we're trading into the inducement. There's our mitigation alongside an M5 EDM. Perfect. Cannot complain about that one at all. So last but not least is the entry. But before I go on to the entry, I basically want to show you why this here was significant and these points here were not significant. So let's go into it. So this is our higher time frame. Now, what do we notice? Again, I just want to point this out because it happens all the time, right? We build our liquidity. We then come back to it, give a reaction away, and induce it. And now we trade away from that inducement. And then when we get inducements to the downside, we continue. Inducement to the downside, continue. Same with this, inducement to the downside, continue. And then obviously our final one, inducement to the downside, continue. But look at what we have here. Again, another liquidity build up. We trade away from it to show, oh yeah, it holds, it holds, it holds. And then boom, vector candles to the high side. Yeah, can't really miss those. So now we have identified another inducement. So what's next? We're now looking for inducements to the high side, and we know that any potential buys that we're looking for are going to be pullback buys. Now, does that mean that we can have a fully bullish day? Of course it does. This is the higher time frame, right? But we should know that with our buys, we shouldn't really look for crazy, like, you know, swings to the moon. If you want to swing, you should know, like, okay, with our buys, we should probably be looking for either like mitigations to continue lower, or if there's liquidity buildup, maybe that immediate liquidity so that we can again continue lower to our overall target, right? And this is our overall target. Now, this point right here is pre-New York trap, okay? And we know that our target is right here. So that is how we know. Okay, so let me I want to draw this on as well, because you're not always going to be this confident, obviously, especially as you're growing your abilities. You will also need to like partial in key places and stuff like this. And so that line that I've just drawn here is this top line, right? So let's just go through the day, look at it. And yeah, let's just go from beginning to end, chronological order. So we have our first build up in Asia, inducement high, and then potentially can look at this mitigation. Obviously, I would not, because it's within Asia. I personally don't trade Asia. And if you guys are able to trade like the main sessions and not trade Asia, then obviously for intraday, that's great, but you're dealt the cards that you have. So if you need to trade Asia, you can absolutely trade Asia. And then we give this false reaction away from this liquidity, right? And now we're building liquidity to the top side, false reaction away from this liquidity. Okay, now we obviously induce to the downside, go into another little build up, and then again induce to the downside. Then where are we expecting this inducement to go? To take out this liquidity. That's exactly what it does with lovely vector candles. This then becomes an SMT and not something that we want to trade. We then create a new low. Again, not really an inducement because there was no clear liquidity build-up, and that's really key. I really cannot emphasize that enough. You guys, if you're not able to spot the liquidity build-up, sit on your hands. Don't touch anything. Okay, then we have our mitigation at London Open. Perfect. Then again, we are in this build up, trading away from our higher time frame, trading away from this and our higher time frame inducements. Now remember what we said about the higher time frame inducements. When we induce high, we are aligned with our higher time frame inducements as well. So these are potentially going to carry more weight until we meet our overall objective, right? Then again, we give M1 EDM mitigation, a little bit risky because you're within the build up. So wouldn't blame you too much if you didn't take a trade like this. That's absolutely fine because you are actually trading within the build up into the inducement. That's fine. And then again, we go into our overall build up, induce it high. As you can see, false reaction, as this line is this. So this is obviously a key support level, and we can see we give the reaction away, and then we look at how nicely this all combines together, right? So we are channeling downwards. Overall, we see on the higher time frame a significant support level, yeah? So we're channeling downwards, we see a significant support level, then we give a reaction from that support level, break out of the channel to the upside with vector candles. So now people are getting a little bit of FOMO. Oh no, I need to get in. You know, maybe they enter on this candle, maybe this candle close, right? Then stops go below here or below here, and they're like, okay, nice, I've caught the move, I'm in, it's all going well. And then instantly it reverses against them with huge vector candles. And here, some people are going to get FOMO or swap their bias. Oh, of course, yeah, it's a sell, I knew that, blah, blah, blah. And then, of course, we know, okay, this is our inducement, we're now trading away from it, voila. Obviously, we don't get our ideal mitigation. This is going to happen. There are going to be times where you don't get your ideal mitigation. I'd be lying to you if I said that it doesn't happen. But the main thing is, with trades, you always want to allow the trade to come to you. You don't want to be caught in the act of chasing a trade, and then everything goes wrong. And you just took a silly loss, and then you're beating yourself up for that silly loss. Like, especially at the beginning, I spoke with a lot of students. This happens. People say like, oh, I had a plan, I was following it, and then I just took this trade, and then I didn't even end up taking the original trade because I was so caught up on the loss that I took that I knew I shouldn't even take, right? So it is best to be patient. Let the trades come to you. Yes, even with intraday, you still have to be patient. It's still one of the most important, if not the most important, skills of trading. That's just how it is, right? But again, these should all make sense. If you're a little bit uncomfortable, partial the trade here. These two, you can partial these two here. Leave the rest running to here because okay, that's my higher time frame target. Perfect. All right, and then obviously this is our final simplicity approach. And just looking at this day, I'm sure you guys can see how nice the concepts come together here. These are the types of day where you can really begin to intraday ping pong. I'm just going to show you the really, really clean trades, but let's get into it, right? Step one, as always, build-ups. So let's go. Again, we'll start from Asia. Good practice. build up, downwards channel, overall upwards channel, little smaller upwards channel, and again smaller upwards channel, downwards channel, and to be honest, end of day consolidation. Right, let's get into this because I really like this day. This day is really nice. Okay, so from our build-ups, we need to identify our inducements. Okay, this should make a lot of sense. Obviously, it's nicer if it doesn't just induce, the build-up, it also induces like a structural point. That's obviously better. So channel into inducement high and then inducement low, inducing this channel and this structural point over here. What are these? Vector candles, exactly. And then we go into a build-up, induce high, and obviously this lovely little structural point here. And then again, channel to the downside. We also have liquidity at Asia low, induce to the downside, lots of lovely vector candles bringing people in. And then we have another little build up, induce low. What timing is this? What timing is this? Remember, timing is still just a guide, but obviously it does, it does exactly that, right? You're not going to enter just based off timing, but just having the guide of timing is very nice. And then again, what did I speak about? They'll show their intentions. Oh yeah, false reaction. And then obviously 1, 2, 1, 2. So now we've identified this channel. And then again, we're getting into New York Open, build up, induce high, induce low at New York Open. What do we know that New York Open likes to do? Provide the false move for New York trap to reverse it, hence New York trap. So then we go into another little mini build up. We induce the mini build up and the overall build up to the high side, and then we induce it to the downside also. Again, with vector candles, can't really complain. We get our mitigation, trade up, target this overall. That's your play. London close is the highest point in the day, so it's going to act as an inducement. And then this would be our ideal mitigation. Just misses, happens, build up, inducement high, overall consolidation. So we don't really need to touch it too much. Okay. Next, from our inducements, we're obviously going to have our relevant breaks of structure. So let's see. Here you can see this is a bit of a tricky one because at this point here, build up, inducement, vector candles, build up, inducement, vector candles. So these are just inducements, and then again, build up, false reaction, inducement with vector candles. So this is just going to be an inducement. And then here, we don't have a liquidity build up. We come up, we take this, no liquidity build up. So this would be our relevant break of structure after the inducement. And then again, build up, inducement, trading away from the inducement. Again, we don't get our ideal mitigation, happens. And yeah, same with this. This would not be a what's the word for it? Relevant break of structure. Why? We've got this overall channel being induced and this overall channel being induced, right? So that should all make sense. What's up next? Mitigation. So obviously, after we've had our inducements and our relevant breaks of structure, obviously we're only showing those on M5, but it's also on M1. You can then look into your mitigations. So induce high, potential mitigation, induce low, potential mitigation, induce high, potential mitigation, induce low, potential mitigation, which obviously unfortunately misses, induce low again, potential mitigation, induce low, potential mitigation, and obviously we would have a potential mitigation up here that becomes an SMT after we have induced low, and then this would be our ideal mitigation for this inducement high. That should all make sense. So next up, we're going to have our SMTs. These should be very obvious by now. So let's go into them. This is going to be an SMT, Asia low, faking the reaction. Oh yeah, it holds, it holds, it holds. Here's the shock, it doesn't. And then same with this ends up being a FFS. I suppose it gives like a little small reaction, so you can call it an SMT. Doesn't really matter too much. Oh yeah, fake reaction down into MM2. Wow, what a surprise. Overall continue higher, showing the hand, and then eventually at a later point when they induce this overall build up, we get a inducement to the downside. Perfect. What's next? Timing. So as you can see, here is a really nice day where you've got your London Open inducement, MM1 and MM2 provide the continuation. New York Open again provides the false move for New York Trap to give us the reversal, and then London Close gives the inducement as it's the highest point for the day. Perfect. So entry helper. Okay, so we got some interesting things here. We've had our inducement, and then we've had that followed by an M1 let. Which one of our entry approaches is that? Again, here the ideal play would be something like this. And you know, this is like a EDM, or something like this, where this has come down. Obviously, ideally we get like build up, inducement, mitigation, continue higher. So ideally from this, we'd have something like this, where we maybe get mitigation and look to play higher into Asia high. Next is the final step, the nice step, of course, the entries themselves. So this should make a lot of sense. Again, I appreciate this is a little bit confusing, but this goes with this, and this goes with this right here. So let's go completely from the beginning. Build up, inducement high, inducement low, with vector candles. Again, this is all just in Asia. This mitigation, right? Then we go into another overall build up, induce high, take out this structural point, mitigation, right? Followed by exactly the same build up, false reaction this time. Oh yeah, it holds, it holds, it holds. Come on everyone, jump in buys. Boom, taken out. Then we get our London Open inducement. And if you look at this, what approach is this? Wouldn't really call that. I guess maybe you call that a mini breaker structure if you want. But more importantly, we've got our mitigation of the inducement, which is approach 2, combined with the mitigation also being a let. Obviously, ideally, you could even take this. You could take that mitigation. Either one is fine, right? So that's approach 2 and approach 3. Where are we targeting? Well, we know that we've had a significant inducement to the downside with the way that we've shown the liquidity. So the most likely target, and the one that makes the most sense, is Asia high. And then again, you could take this, but this is more of a advanced / risky trade. Obviously, ideally, this comes down, fills this imbalance, gives you the EDM, and this would be a beautiful trade. Then again, Boom. New York Open, we have this little build up here into inducement to the downside. We obviously also induce to the high side. Ideally, we get this little M1 fill. So that would be like a lovely way to take that trade, trading into the inducement. And then here, if you remember, this was our M1 let, this was our inducement. This is our mitigation to trade against New York Open, grab some liquidity to the downside with what? Vector candles, nice speed. And then we have our relevant break of structure after the inducement. Take this mitigation, again, I'll probably take like that. Take this mitigation and trade to the high with London close being the highest point of the day. So that's our inducement. This would have been our ideal mitigation to again trade lower, fill some imbalance down here. It's a London close trade, so you're not going to be aiming for the moon. And yeah, that obviously ends our day off with the consolidation, end of day consolidation. How simple.
Alright, so here we are with the simplicity approach master guide, and we do it a little bit different this time because you slowly but surely have to get used to how to do it on real market conditions, quote unquote, on the edge, live in the markets, because that's obviously where you have to do it anyways, right? So let me show you how we will do it and how you should do it. First of all, from now on and until eternity, all over again, and how you do it in real market conditions, and how you also should train and back test and forward test and do your tasks like this and really put in the work, because that's where the true magic will reveal itself. Okay, so first and technically, let's first dig into how you should train your eye overall and how you should see these things. Let me get my pen here. For example, let's zoom a little bit more in, right? So that you have to get used once and for all to see these build-ups, inducement out of Asia range. When does it happen? In this scenario, Frankfurt, where's this internal break of structures, where's your mitigation areas, right? And where's your next build-up? Where's your next inducement, minor inducement, some sort of baby medium ones? When should that happen? Some sort of magic manipulation minutes time frames, right? But this is the build-up induced in here. Also Asia range low, right? Where's your break of structure? Where's your mitigation? Where's your next tube? That's always the biggest vector candle you can have, right? When should it happen? New York trap time. Induce the overall picture, right? So you trade away from that inducement, right? Into what? Next medium inducement target. Again, you have this baby cycle into medium one, but the next target is obviously the next medium inducement low. What is a price? Gets taken out by the pip, right? There's your next mitigation zone in here. If you don't like it, you trade the order flow later, and so on and so forth, right? And it continues endless. Again, you look for the next build up, which direction to get induced to the high side, you trade away from that. Next build up, getting induced in what direction? High into mitigation areas, not the cleanest one in this scenarios, but again, very clean in here. When should it happen? London Open to the absolute minute, as you can see here. What's your next target? Medium inducement, vector candles. You can see that from 15 miles away. You wait for what? your next build up into inducement with vector candles. When should it happen? New York trap time to the minute, right? Into what? Into mitigation this time, right? Because you induced out of Asia high the first time, okay? Into vector candles, into mitigation. Next cycle completed. Build up, inducement high to do what? Into mitigation to go lower. Faking the small money trap reaction. Build up, produce a low in this scenario, right? Building up equal lows in here, even nicer in Asia. Next build up, getting induced what direction? Low, another build up in here, right? Okay, to induce what? High first, high out of Asia range to go for Asia low, and these equal lows building up in here. Perfect, with a wick in here. When should it happen? London. Perfect, right? So it's it all over again. Next build up, induced to the low side to go once higher. Why is this so insignificant? Look at it. Builds equal highs in here to take it out with this medium inducement. Perfect. What do you do? Wait for internal break of structures, mitigation. When should it happen? New York trap time. You see, again, but that's hindsight stuff, but you have to get used to it. See the build-ups, inducement of the build-up with this wick into extreme mitigation. When should it happen? New York. It's the same stuff all over again. All over and over and over again, right? So if you continue this play forever, and you have to train your eye for that, right? See it always. Build up, inducement high, into the mitigation, right? Then guess what? Build up, induce in what direction? First of all, mine inducement out of Asia. We don't care too much because what does it do here? Build equal lows with this point. The next target is the medium inducement at least, right? Induced to the high side, the build up to tube down. But obviously you had much greater targets down there, which got tubed later, right? So, and that brings us, let's do some real training here. Because again, you just have to see that, and as long as you can't unsee it. See it, backtest it, backtest it, backtest it. Put in the work. Week 5 now, that is where the magic slowly needs to start to happen, okay? Again, a lot of you guys already absolutely smashing it, and we couldn't be more happy and proud to see that. But now, slowly but surely, it's your time, okay? Where you have to really, really start smacking it, okay? So, if we, for example, now just break it down and I'll show you how you should do it also. And you will also see how perfectly you can do it all the time, right? So if you just whatever, go on the edge in here. Again, you try to do that the same thing, slowly but surely. First see it in hindsight, see it so long until you can't unsee it anymore, and then try the edge work like how we're doing it here. But first, obviously, you have to see it in hindsight, because if you can't see it in hindsight, how would you ever want to see it on the edge and then in real life market conditions where emotional, where you're trading, where you have to wait? It's not like quick, but you literally have to wait for hours, minutes, whatever, like until you set up a pairs and then you're in the position. It's all obviously psychology. That's why next week we will dig big time into psychology as well and prepare you obviously for your big journey, goals, and everything else regarding that, right? But for now, again, how we did it exactly in here, we just do it now on the edge, but a little bit more in detail, and of course with training view, okay? So if, for example, we saw, okay, this one right here, perfect, that is already our medium inducement, perfectly fine. Okay, so if you zoom out, what do we have in here? Okay, took out this target as well, right, with these fancy equal lows or even triple bottom, 1, 2, 3, and here, right? Then even here, takes it out in New York, open, perfectly fine. And then the next inducement low happens very late. So that's a low liquidity inducement target, okay? If you look for next area of interest, the next liquidity zone for mitigations of this inducement would be some sort of this next equal Asia midlines in here, right? Or if you want to take the mitigation here, that's also possible. And the next liquidity point would be Asia midline, as always, right? That's always where the liquidity zones are. Get used to those liquidity zones, okay? But for now, we are, of course, knowing that this is some sort of medium inducement. We want to trade at least away from it until the next at least inducement is. And look what are we doing? 1, 2, 3 to the high side. Where's your next mitigate? And let's say this is an inducement to the high side. What's the next logical thing? Again, inducement. First of all, the build-up, inducement, then technically a break of structure, or then into the mitigation, right? So if we say, okay, this in here would be the next mitigation zone we would have, right? So this, again, you see all these imbalances from here to here. 1, 2, 3 tops, right? Now what they're doing, right? Perfect. So lovely build up in here right before Frankfurt Open. Okay, so we already know what could happen in these scenarios. Okay, that's very good to understand, and that's what you always should do. Then again, remember the simplicity approach. Get your next timing window. Set smart money traps, right? You can always, this is obvious one, right? The Asia low one. You can also say, okay, make it a little bit more better and say this is the next smart money trap. Right, it's next smart money trap because it's also the yesterday low. And this was a very weak timing inducement. And this should be the better one, but it didn't hold. So chances are very high that they come for this one as well in a proper timing. And then obviously go for it again. And if it's not a proper timing again, they at least have to do it again or induce it again. And then again, just building up these traps low. So no more buyers are in there. Okay, so they tried it once in here. If they do it a second time, even if the timing is a little bit off, that just indicates here, okay, chances are that they're just inducing low, not timing, not high timing based inducements. So no one's getting in there anyways. It's just made for stopping people out because there's no liquidity in the market. But we have to wait and find out. But here, same scenario. Okay, just this build for stopping people out, not to get people in. Okay, so we already know, okay, not a lot of buyers are in there anyways. Okay, so if we do this one more time lower, no more buyers. Okay, so that's really good and essential to understand. Okay, for now, we know build up right before Frankfurt Open. Okay, so if you see some sort of inducement high into this point of interest, that's our preferred target zone we want to be interested in. Okay, so let's see what they're doing. First of all, let's zoom that a little bit more in because my eye is getting a little bit old. First of all, we see this juicy equal highs. Okay, so that couldn't be more obvious what they're trying to do here in Asia high. Okay, so perfect. So then again, we have this equal highs right before Frankfurt Open, and we have this juicy big build-up in front. So if it gives a fancy inducement in here, that's the Mona Lisa scenario. It just gives a minor inducement of this one, it's fine also, okay? But you also have to keep in mind, okay, we have this quadruple bottom top in here. Now it's again quadruple because of this. So it becomes very juicy. So the only thing we wait again is what? Okay, Frankfurt Open. Oh, vector candle. First even minor inducement low. Interesting. After this double top in here, right? Makes people interested in here, right? For the sell side, then stops them out. Boom. Okay. The thing is, first of all, it's absolutely to the minute, right? Frankfurt Open to the minute, but it did not tap in here. It just stops in here. So this is just a minor cycle to the upside, but not, again, even though I was also checking here, not really induced this bigger picture channel in here, right? So it's technically still inside this overall channel in here. Okay, so there's not a, again, if you have to find and guess if it induced the channel, it probably didn't induce it. Okay, it has to be a clean inducement out of a channel or out of a build-up to really see, yes, that has to be induced. And right now, it's just inside of this bigger build-up. Yes, we have an inducement out of a midline Asia high, and we have an inducement of this quadruple top in here. So for sure, 100% for sure, we can expect a reaction out of it. Okay, that's for sure. So we know that for fact. So there's my pen. So if this is just the minor / medium inducement in here, we can expect an inducement low. But again, the daily cyclist build up and we not induced high of the buildup, we want to induce low. Okay, so what's our next target zone if it induces low? Next liquidity area, Asia midline. Okay, then we induce the cycle to the low side, never mitigate at this point. Then we can look for the mitigation in here. Mentioned it ideally happen. London Open could be a little bit too less, right? Because technically London Open would be in these areas. And then New York Open could happen, just a little bit maybe too early, or New York Trap would be somewhere in here. Could be both possibilities, but that would be our ideal scenario. But overall, our target is still low and technically the next mitigation zone, okay? But that's how you run the overall cycles and combining it all over and over again, okay? But for now, the only thing we have is inducement high, medium ones, not induce the buildup yet. So that's where you have to start combining your thought processes, okay? So technically, again, if you're getting really, really advanced later on, and again, you see us, or you saw us doing that a couple of times, technically you can enter in here some sort of, because you understand, okay, that's my clean inducement of Frankfurt Open, right? So just for, again, do not do that. Do not do that right away. I'm just saying for later on, if you're getting really advanced, you could do something like this, right? But again, don't do that. I'm just saying you could if you really wanted to, okay? Because you understand, yes, double build up, inducement out of Asia to the absolute minimum, Frankfurt, still in the cycle. I'd want at least Asia midline to get induced to low side, okay? But for argument's sake, I'm not in this position, okay? But we understand, okay? There you go. So now it starts to induce the channel to the low side. Okay, we're on the 1 minute now. It's get very clean of what they're trying to do here. Okay, so make people excited for the short side and inducing this channel to the low side. Okay, perfectly fine. There you go. Touches Asia midline. Okay, we're not doing anything because we will not pull a point of interest out of our arse in here and just say, oh, okay, let's get in there. We need more confirmations than that. Okay. For example, break of structures, entry helpers, all of that stuff. Okay, so let's check entry helper, for example, nothing. Okay, so you're not making stuff up. You just understand, okay, it's getting very interesting to slowly but surely preparing for buy position, but we will not pick a peak just randomly inside of an inducement phase. Okay, so we're in the inducement phase and now slowly but surely see what they're doing, getting some sort of build-ups, which we could get interested in. Okay, so things starting to get interesting because of you getting a build up to low side already in the inducement phase of this to the low side. Okay, so let's see what they're doing. Okay, still some sort of making a quadruple bottom in here, and also look to the left. Look what they're trying to do. Building 1, 2, 3, 4, 5 touches to low side. Okay, so interesting what they're trying to do, and boom. There you go. Now you have it finally inducing out of it to a low side. Okay. Are we done yet? We don't really know. The only thing we can guess is, again, we should never guess in the first place, is, okay, so let's see what they do. Perfectly fine. Okay, so now it becomes very interesting for us because you understand this overall buildup got induced to low side. We have some sort of build-up in here, right? Technically, even induced that one, even nicer for us overall. If you have an inducement low, that's again, we will not run random limit orders in here. But now we understand, okay, now shit hits the fan. Because why? First of all, what's your time confluence? London Open to the minute. Build up, inducement, right? So perfect. Timing confirms to the absolute minute. So we have inducement low to the downside. Okay, even nicer, right? If it's a new London Open thing because they want to induce in the wrong direction, of course, right? Build up, get induced to the low side right here. Right, induce structure to the left, and we're on this overall build-up which got induced to the low side. We had a baby buildup inducement with timing. Inside here, we still have our overall mitigation targets to the high side. You're starting to see it, what's going on. So now we're using our simplicity approach. Right, so first of all, we have already, after buildup, inducement, timing, relevant break of structure. Okay, so we can take this zone for mitigation areas. Okay, we already can know that based on the break of structure, and we just wanted to look for the mitigation in here, right? So let's see what they're doing. Just they're chooping out of there. Of course they do. Right, so let's see for more buildups to confirm the thing overall. So first of all, again, they're faking simplicity approach. Remember, what's all your steps? Again, build up, inducement, relevant break of structure, get your mitigation zone, get your smart money trap zone, and then look for timing. We have already our timing, and then look for obviously tapping into it, entry helper, all that stuff. Okay. So first of all, we understand, okay, smart money trap gives a fake reaction. Entry helper, faking. Okay, perfect, because again, it's a fake reaction in here. So let's see what they're doing. Okay, so stay away from our extreme in here. Okay, faking the let is what instead? Some sort of EDM, right? As you can see, this is a little bit lower, faking the let in here. Okay, perfectly fine. But this is some sort of build up right before our proper point of interest. Okay, so don't get trapped in there. Okay, so let's see, again, faking the order flow in here for people that are looking for sells away from here. Okay, and now, induced the build-up to a low side in our point of interest. Okay, kind of missed by a speckle. So let's see what's the next thing we're doing. Okay, the next thing we're doing is, of course, waiting for internal break of structures, which we have right here. Okay, and now things starting to align. So then, again, we're having this imbalances left. We take the low in here. So that's the last imbalance. That's the low point in here. And now we slowly and truly can trade the order flow. Okay, because we understand, okay, smart money trap is done. Order flow getting tapped in here. Perfectly fine. We just have to be careful with breaking even too early. Okay, as we have it in here. So we're still in this situation in here. Perfectly fine. Still in. Gives you some crazy shaky hands. Okay, but technically, again, definitely not the nicest trade, but again, just shows we've not cherry picked like any markups or shit like that. It's just, again, sometimes it's not nice, just it is what it is. But it's the real life market condition. Again, there's no point of us giving you these Mona Lisa examples all the time because, again, every day there is a Mona Lisa for sure, but not all the time. You have to get used to this rough market condition as well. And now everything is there what we need. Build up, inducement, break of structure, timing, smart money trap, mini build up inside, inducing it into the point of interest, internal break of structures, or even this one if you like that nicer, into extreme mitigation, comes back even 2 more times. Who knows why? Probably because they want to take it out later on, right? So that again builds the quadruple top, triple bottom for later on. Again, once we tapped in there, we can always take out this liquidity they're just trying to build up now. Okay, but for now, this is definitely valid to take. Okay, what's the entry helper saying? Okay, we slowly can have lets as well. For now, not really. Okay, so let's wait what they're trying to do here. Okay, so that's your order flow entry right in here. And at this scenario, you already can see that would have been the way nicer entry right out of here. So let's say this is again the internal break of structures. And technically, that right here would be a nice entry. Technically the same exact trade from in terms of the risk reward, but just gives you way less shaky hands. So sometimes waiting longer is even better. Again, sometimes yes, waiting longer will miss you a trade, but sometimes waiting longer gives you the way cleaner trade. Okay, so that's a roughly 1 to 9 trade. Okay, so not the baddest trade in the world to start the day off. Okay, so if you continue, if you continue our play in here, okay, so it comes even back 1 more time, but now it definitely should be done. Okay, it gives you another order flow entry in here if that's a let. Okay, there you go. There's your let entry. So that's probably again already seeing the mess is all over. So that should give you the most juicy, stress-free trade, as all the craziness has been already been done in here. The madness is over, and now you're finally getting your juicy let entry after all this madness in here. Okay, so let's see how did it play out if we made shit up in here. Okay, first of all, of course, faking the quadrillion top in here. So what happened next? Okay, so they're faking again the reaction, and now there we go. Okay, so now it takes out. The only thing I don't like about this, and again, that's where you should also see slowly but surely. Look what they're trying to do here. Whoopa, this one. What's going on here? Oh, is this right here? So why is this dangerous for what for our positions in here? That's the build up. Look at it. 1, 2, 3, 4 touches to the trend line. 1, 2, 3, 4 touches to the trend line. In which direction is this build up just getting induced? What's your structural inducement in here? Right, getting induced to the high side. This build up getting just chuped with vector candles, so we're having another cycle inside here. That's where stuff gets a little bit tricky and you start to understand slowly but surely. Okay, so if we understand that, if we are just having this crazy build-up in here, and this build-up gets induced to the high side, structure gets also induced to the high side, what's most likely going to happen? If you have an inducement high, you want to go lower. Lower until when though? Next structure point, and that would of course be in here, this one, right? To go higher overall inside here. Okay, so if that knowing, we have our position right here. So best case is that you just take it or break even. But if you just break even, you're running the risk obviously of getting the break even. Now you're just having 1, 2, 3. So not the best scenarios in here by any means. Okay, it's actually again real market conditions when they are not nice at all. Same thing with that position. That runs the risk of getting a break even for sure as well, because again we're now looking for inducement this to low side, and we really don't see any clean points in here where we can predict how or where price action should go to. Okay, so let's see what actually happened in this scenario. Okay, so first of all, faking again now the order flow, just to get people into the buy position, to then take them out, take out the structure point, okay, of how we expected it to be. Okay, and there you go. That would definitely be your break-even position, right? But now, of course, we induced this point to the high side, induced it to a low side, and now we're seeing already a new little baby build-up in here, right? Okay, and that technically could be already done because we have the structural inducement already, right? Okay, it could be the inducement to a low side. We have the structural inducements here and here, right? So that technically could be done. Magic manipulation minutes right around the corner as well, right? And now hopefully things starting to get a little bit more clean, right? So definitely a very challenging day, but it's good that you get these advanced days, yeah, shown by me as well, because again, it's actually, yeah, good training for me as well. And that's definitely a very challenging day, so why not? Okay, so you see how it's not always picture perfect. Yeah, of course not. It's just reality of how it is, and you have to take things how they are. Okay, so let's see what's going on there. Okay, so technically, personally, again, not by any means not a nice day, but technically this could be your extreme, right? You're technically having, right, some sort of equal highs in here, which sometimes again on is nicer than the build of magic enrichments right around the corner. Okay, so let's see. Okay, taps into the, so technically again, not the nicest day by any means. I'm just showing you how you could make the best out of that. And then if that thing doesn't hit in, then I'm jumping straight out of the window. Okay, because it cannot mess so long around, magic manipulation minutes, see if you're getting even a better entry in here. Okay, that's technically now nicer. Okay, what's your next mitigation area? Right here. Magic manipulation minutes now to the minute. Okay. Simplicity approach. What should happen next? Let's, okay, kind of having a let already. So that's a good, oh, that's a good order flow entry, and that's probably now after all this bullshit is done and we even thought, okay, that could be the safer trade in here. We had another baby cycle in here, induce this channel to the high side first to go low, structural inducement, into magic manipulation minutes, internal breakup structures, into order flow. There you go, 1 to 11, 1 to 18. Better anyways than what would it have been, 1 to 7, and this 1 to 10. We technically could still be in there, most likely break even here. Okay, so that's technically most likely break even. So, okay, depending on this one, again, known scenarios in here, that's an L by any means. The only thing is this sweaty hands entry in here, this sweaty hands entry in here comes very close in here as well. Better entry 1 to 11, right? In here, magic manipulation minutes, after another build up, structural inducement to a low side. Overall, we in this cycle, overall, we still trading away from this bigger picture cycle inducement to a low side, had the craziest messing day in here, right? But finally, let's see if we made shit up. But looks good in here. Okay. Okay, there we go. Boom. Okay, that was a tricky day. I'm not gonna lie. That was actually crazy. Okay, so targets are hit though. We're having our mitigation zone we had earlier in here as well. We should not refine it too much because as you look at this craziness, not the nicest thing to refine by any means. Okay, so what we do instead, simplicity approach. Here's your build up. Couldn't get clearer than that. Clearly getting induced to the high side. Even this channeling upwards inside in here. Right, okay. Induced to the high side into now our high time frame, or this scenario, 5-minute time frame, point of interest. But now we see, okay, overall they achieved everything they tried to do, building up the overall channel, inducing it to low side, inducing structure point to low side in London open, giving the internal breakup structures, coming back to a mitigation zone, giving a very messy price action in here, building up, inducing it high to the first time, inducing structure to high side as well, to go lower, inducing structure to low side, giving a baby build up, internal breakup structures into mitigation, 1 minute let, perfect, another build up, vector candles out of now this inducement point in here, into finally this overall mitigation zone. That's how, again, you should slowly but surely connecting everything together you have so far. Now, this cycle to the upside is completed. Okay, now we're looking for a proper starter kit variation where we have this tap into the POI. Okay, now the next thing we look for, of course, after build up, inducement, relevant break of structure. Okay, so let's see if this day gave us some more nicer plays in here, if it stays like how it was, like not clean at all. There you go. So build-ups, again, first of all, vector candles, we know that this cycle is done because it overall inducement of the bigger picture cycle, low side first, into vector candles, into mitigation, overall did exactly what we wanted to see here in the first place. Okay, and then if that holds, the next target is Asia low and smart money trap into some sort of mitigation, okay, for this day. Perfect. Okay, so let's see what they give us first though. They give us a breakup structure. They're not really giving us a point of interest. Everything is mitigated. We should not pull something out of us and say, this is the point of interest, or this, or this, or this, or this. So the best scenario is to wait for what? Entry helper. Okay, so we now know this tapped into the mitigation. The cycle is completed. Perfect. Now we're looking for reversal trades. Okay, so let's wait if the entry helper gives us a hint in here, and it looks good. It looks definitely good. So that's technically you let entry in here. So what you do, you just have to again take the last supplied amount candle, which was the inducement in the first place, tapped into there, and your position should be with the let entry some sort of market execution here. Stop goes above here. Okay, so kind of a big stop, right? But what's the target? 128. Okay, so not too bad at all. Okay, so let's see what's going on. The let is technically locked in. Again, we're not having a clean mitigation zone, so it can mess around in here as well because there's nothing clean. We look for mitigation and we're not pull something out of Oz. Now we just locked in the entry helper. So things is looking good. Okay, it comes even back. Again, completely fine. It can do that. Still is whatever, completely valid. Nothing you have to be shaken out. Anyways, okay. Okay, perfect. So now things look better. Could pull this thing at break even as the risk is off, right? We're having a perfect build up, but you build up into back the candles into the overall mitigation areas. Overall, this cycle is completed. Now we're looking for reversal. The next target, either Asia low, or if you really know what's going on, next medium inducement in here. Okay. Perfect. So let's see. 128 in place. What's the next things we're looking for? We technically had our 1 minute let already. Looking for EDM trades. Okay. The next only thing we're looking for and interested are EDM trades. So if that's an EDM, it's tradable. Just has to come all the way up here. It does not. Okay. So completely fine. So that's off the play. Okay. So next thing to wait for is again, same thing. You're just looking for next thing. So now timing aligned. So that's really nice. Okay. We already can see what they're doing before the timing. A build up. Build up gets induced in what direction? You already can see that. In what direction did the build up get induced? To the high side. So what are you looking for? Normal order flow entries in here, right? If it taps, no, it does not, but it induces it to the high side. Missed the extreme mitigation. It is what it is, fine, but at least you know, okay, it induced the build up to the high side, so you're looking for more downside. Completely fine, okay. And just setting a baby build up before that, okay, and there you go. Price action starts to go lower, perfectly fine. And now we already can see what they're doing in here. Right, building a new channel. Right, so we copy that over. Again, not the nicest by any means, right? So maybe let's make it like this even, right? So something like this to give us at least some sort of valid channel in here, right? We have this 1, 2, 3 touches in here, right? And the other touches of 1, 2 in here. So we're still in this overall channel buildup. Perfect. Okay, gives us even 4 touches. So now it induces in what direction? To the low side. Okay, so this channel is getting induced to the low side. Perfect. So now we complete this channel and say done. But where did it tap into? First of all, induced out of Asia low and the structure point and taps into the smart money trap. Okay, but why is this technically something you could take now? Because you have a valid cycle before. Yeah, you have this build up, 1, 2, 3, 4 touches, getting induced with speed, right? Perfectly fine, right? Timing, London close around the corner. So you could trade this off and smart money trap reaction as long as you understand. First of all, I would close now this trade in here, right? So this is a 1.9, right? 7.9, 1.9 would be not the best trade, right? So now we understand, okay, the next build-up's getting induced to a low side with speed, also inducement out of Asia low. So technically you have your minor inducement and a mitigation somewhat overall should be smart money trap. But for this play, it is valid to give a reaction. Smart money trap should give a reaction anyway. So if you want to trade it from the extreme, you could. But again, not the best trade and not the safest trade by any means. But again, you're not trading Asia low, you're trading literally the inducement of Asia low into some sort of point of interest. We understood also later on was some sort of medium inducement, right? But not the nicest one anyway. So we expect that to be induced even on. But for the cycle now, we had a valid cycle for completion, and we should aim at least for, again, something like this, because again, it's getting very late in the day also. You should not aim for defenses. And overall, we're still looking for our what? Remember what we had in here? That was our let entry. We're still looking for EDMs. There were no EDM trades in here. Overall, no EDM trades, okay? Even this one doesn't really classify as an EDM trade, okay? If you really want to make it up, you could, but that's not the EDMs we're looking for. We're looking for clean 2 structural points, right? Like whatever, like this, and then EDM. Not like something in the middle where it's, again, like, let's say this, and then this, and then it comes high in here, and then you don't run the EDM from here to here. You should run it from here to here, right? But again, something like this we had in here, which could give you a modified EDM. It worked out pretty well, but it's not the EDMs we're looking for. We're looking for clean EDMs, okay? And we didn't have that yet. So if this taps back in, that's a clean structure point. That's your clean baby buildups in here into inducement, away from the smart money trap, gives the false reaction, and then EDM into taking out the smart. That's the Mona Lisa scenario. But for now, we're having this extreme in here, okay? So let's see if it holds. It does, okay? So what we have now, simplicity approach, build up, inducement, relevant breaker structure. That's the push it led to the extreme. Getting broken, what's the extreme mitigation? In here, okay? So where's the smart money trap? Again, mitigation comes with a smart money trap. So that's your smart money trap. Again, that's how you target or build up all these targets, okay? Because you understand, okay, that's my valid cycle, build up, inducement, breaker structure, mitigation, smart money trap, timing, lets, entry helpers, all that stuff. And then at last, or at least entries, right? So next thing, only we're looking for entry helper. We see already, okay, crosses the equilibrium. Perfect. So we lets our possibility, right? So first, there you go. And look how fancy it was. Did you see it? Kind of tapped a let, not the cleanest one. Okay, that's really nice. Now, there you go. That's your let entry of the extreme. So if you didn't catch the extreme mitigation here, that's your new possibility, right? And that is Mona Lisa shit, right? So when should it happen? What's the next time window to confirm the simplicity approach? London close. It's like 7 minutes before London close. What a surprise, right? Okay. Well, comes even lower. Perfectly fine. Still in it. There you go. Now it even was almost to the minute. It's technically 4 minutes before. Okay, but definitely held. Okay. So that's your London close trade right in here. And even comes back to give you another possibility. But the let entry is here, if you can see in here. Perfectly fine. Everything is aligned. And now look what they do. Building up triple border, triple tops in here. Right, so lovely. There you go. That's your smart money trap. We knew earlier. Okay. There you go. Smart money trap. And now look at the magic. Look at the entry helper. Look at this structural point. And look at the structural point right in here. It's already EDM. So if it taps into here, again, everything we wanted is aligned anyways. We wanted this trade to go at least just a little pullback trade after smart money trap gives a fake reaction. We could have traded definitely validly because we had a baby cycle inside as well, right? So it's even nicer. It's even 10 times nicer. It does exactly what we wanted. Like, what's the chances of that? Right? So let's see. Boom! Taps in to the absolute speckle. Okay. So guess what? That trades out. 1 to 7, 1 to 7. Okay. Out and in. That's your EDM trade right here. And you aim lower. Obviously, you want to take it out. Right? So guess what? You traded this build up, getting induced into smart money trap, build up inducement, relevant breaker structure, into mitigation, smart money trap. Right? Boom. Timing. Entry helper. What? And overall, we expected the EDM. Still missing. From the let into EDM. Into now, smart money trap getting taken out. And then obviously the day is over anyways. You're looking for the medium inducement in here. So again, if it will hit it late in the day, we don't know, but that technically is our realistic target in here, right? So we should aim for, whoopa, at least that, right? So let's see. 1 to 10 to end the day off. If it holds, let's see. Okay. And what's even nicer? That's the push that led into the inducement or into the mitigation here, right? But technically, again, you have your reaction. That's the push that led to the high. That's your internal break of structure. So if it comes, taps the extreme, that's another possible entry in here if you don't like the extreme in here or if you missed it. Okay, so it comes back. Comes back. What? Okay. So that's another entry opportunity right here. And you see how we made out of this. The day started like a crazy mess in here. But guess how it ended? Mona shit. Mona Lisa shit. Okay. Let's see if it actually does what you want. Oh my god, Chup! Should I say anything? You see? And that's how you can run it later on. But again, it's not that easy to understand at first. That's why practice. See it. But again, that's how you have to follow the whole story over and over again. It always starts from zero. Build up, inducement, relevant break of structure, into mitigation, timing, smart money trap, entry helper, everything over and over again. But everything is still in the overall picture we had. Build up, induced on a build up to low side. We trade it to the upside until the bigger picture. Mitigation induces the overall picture and completes the cycle to the upside. Then the whole thing starts all over again. Internal break of structures into let entries, timing, EDM trades, target -1 into smart money trap. Smart money trap gives the false direction, London close. Into baby cycle, build up, inducement, break of structure, into smart money trap, into mitigation, right? Timing as well, internal break of structure, into mitigation, into medium inducement. It's all there. You just have to see it once and never unsee it. And you set forever, okay? It will be hard to get it used to it. But as you can see, even if it's not easy, it's definitely doable. And look at it. Okay, even if you mess up 1 or 2 times in here, you will get it back for sure. Look at it. There's abundance of entry opportunities, and you should understand every one of them. Again, in here, not the nicest ones. Okay, in here, definitely nice and one. Definitely nice. Nicest one being for sure the EDM and the break of structure in here into the mitigation of the break of structure of the EDM. That's the Mona Lisa trade in here, and that's a 1 to 9. Just like that. Boom. Okay, it did not give you sweaty heads at all. Just taps in and it's gone. Gift from the gods. Perfect, right? But obviously, now we're in the medium inducement stage. Again, the day comes very late. Okay. So we will technically not be too keen about that. Okay, so we just let them do their thing. Okay. Because again, it's getting, what is it? Very late in the day. Okay, so it's perfectly fine to just stay away. It's completely fine, okay? So overall, let's see. Target, got a hit. Now we know, okay, this some sort could be a medium inducement. Perfectly fine, okay? But we're not really interested in winning it right away. There you go, even hits another target. Okay, perfect. So now things look a little bit different now because they even hit the other target we marked up earlier with the Asia midline being the liquidity target, and then they run it even in here. Okay, so that's really nice shit. So if you really want it now, we could run it back. So let's see. Okay, now technically not. Technically not the nicest thing, but again, you technically have your medium inducement, internal break of structure, right? Okay, so let's see what they do. I'm just curious myself. Again, nothing we really would be interested in because the day gets very late. Now it gets very nice. So overall build up in here. Okay, what's that? News candles or something. I would still consider that in the build up. Okay, that's definitely induced out of the build up low side induce the structure. What's your extreme point of interest? Right, and here taps. Again, how can the news? How does the news do that? Complete the picture. Oh, the news are so random. See how they're playing with the news in here, just to the what, induce the build up to the low side, into structural inducement, into the mitigation. Again, very late. All right, okay, so technically nothing you would be too interested in about. But again, there you go. Tapped into it to the perfection. Like, what a surprise. Look at the M5 in here. Medium inducement into the build-up. It gets induced to the low side. That's your imbalances from here to here. That's your point of interest. Gets tapped with the news. Like, are you kidding me? Like, are you kidding me? Like, no joke. Are you literally kidding me? And again, what should be the next target? If we have a medium inducement, boom. Exactly. There you go. It's out of it. Again, I don't want you to trade this trade. That's why it's kind of the news thing. They hold it until the news. But guess what? If you know what's going on, you can trade it. But they don't want you to trade. And you can see how obvious they make it that you don't get into these trades. Very late with the news, whatever. Like very unpredicted moves in here. Oh, didn't even know what's going on here, right? What a surprise. But guess what? It's so obvious. It's so obvious what they're doing. You just have to see the overall picture. And then for argument's sake, if your limit would sit in here because you understand the build-up, should get induced to low set into the mitigation, you don't really care about news anymore, is it? It's very too obvious. And again, the last target is a 1 to 15. Just like that. Just like that. Boom. Okay. So is it that hard? That's what she said, right? But again, it's just Mona Lisa shit. It's just Mona Lisa stuff. So get used to it. You can do a couple of more days. Just end this video here. We continue the next video right with the days. But again, probably an hour in already. I have no idea. Lost my my track of time at this stage. All right. But we just continue with the next video right here to see if we can make even more days. So let's continue the lovely play of the day we had in here. Again, wasn't the cleanest day in London, but definitely became very juicy in New York session and after. Even like very unpredictable news. Who would expect that, right? So we're just continuing the story. Let me just first get a sip of water. And there we go. Okay. So we just, again, at this point, it's very late in the day. The next thing we anyways do is wait for Asia range and see what they're trying to do there. Okay. And let's see if we can even make a sense out of what they're doing in here. So Asia range, very obvious in that stage. Okay. So we had, first of all, First of all, you have this huge tube out there. Okay, so we know that kind of already. Okay, a lot of people get very excited about that. When they see the next day, wow, the news! Oh my god, this and this and this. But anyway, so we had this baby build up, whatever this wedge trading thing, whatever to call it, getting used to low side to go higher, right? And then obviously it's kind of whipsawing itself. So we're not really interested in that anyways. Okay. But now we see, okay, 1, 2, 3, 4 highs already getting tapped to the high side. Okay. Now takes out that high with a wick right before Frankfurt session. Okay. So not too bad. Not too bad. So let's look to the left. First of all, we already had this huge tube to the upside. Okay, we have this minor inducement. What's the next technically point of interest in here? Again, remember your liquidity zones, Asia low, Asia mid. In this sense, no Asia high, no, because this becomes liquidity for sure. Again, this should be taken out. And if they play a play to the upside and want to mitigate something, Asia midline. Again, this was the lost imbalance, comes back. Again, very, very, very juicy trade, by the way, right? Build up, inducement into mitigation. And now this one also leaves imbalances in here. What is a price? Does it right in here? Okay, so if this is getting a play for the high side in London, that's your point of interest right here, right? Because guess what we have in here, or what we had? Some sort of these build-ups, right? Not the nicest ones, but you see what I mean, right? Into inducement low, higher, into inducement here, but that's still Asia. So we're not too crazy excited about that. The only thing we see, again, if we run the build-ups properly, is this. Okay. Again, that's why you have to also train your eyes about seeing the build-up of the 1, 2, 3, 4, 5 touches to this trend line thing. Okay. But that's technically your build-up you already should see. Again, then when you have to kind of mirror it downwards, that's where the trick gets a little bit trickier. Again, that technically fucks it up, so you just have it like this. Okay, but then you see this is also in the build-up. We never induce the build-up to the high side. If anything, 1, 2, 3, 4, 5 touches perfectly. Yes, this whatever higher high, but that's nothing. Why? But it's not an inducement, it's just a new higher high. Okay, we want a clean build-up, which we have now. And we want to see an inducement into the mitigation zone. That's our Mona Lisa scenario we can have, right? So what's the ideal scenario? Again, you learned already, is the fast and fructuous scenario, where we have Asia midline point of interest, EDM trades, EDM setups. That's a possible trade you can take right in here. Right, again, off the Asia midline, being an EDM, not the cleanest ones by any means. Right, so if you break it down to the M1, let's see if it's a little bit more cleaner. Not really. So we're having this Asia midline point of interest in here. Right, we're still in the build-up. We're having an M5 EDM confirmation. Right, so the only thing you could trade in here would be something like this. With, again, the baby build-up. Getting induced to the low side, structures points getting induced in here to the low side, right? And then into kind of this extreme point of interest. So just for argument's sake, so again, you're getting used to these trades as well. Again, best case, you're getting a little bit more cleaner. In this scenario, I would just put my stop a little bit low in here, right? And then you just aim for inducement trade. You start off for juicy 127 trade for the day, inducing the channel, having an EDM fast and fructuous trade. Again, when should it happen anyways? In Frankfurt session. You expect Frankfurt to bring the liquidity, to create the inducement, and then into the London inducement. So again, technically this would be a possibility, right? If the target gets hit in here, or at least you should aim for Asia high in here. But the ideal scenario is, of course, this target we marked up earlier with the point of interest. So let's see what they bring. Okay, so taps in. And Frankfurt kicks in, brings the liquidity, induced out of Asia high. So that's your, again, your inducement trade with speed. Again, if you're not too sure about it, then again, that's a good place to close it out. 126.5. Again, there's worse things to start off the day with a 126. Okay, but now your understanding of the build-up comes in. Again, 1, 2, 3, 4 touches. You extend it out. Okay, to see when it gets induced. Is this getting induced or is this a touch? Right, it's a touch. It's not induced yet properly. Okay, so and that also will help you if you draw these build-ups correctly of clean touches in here, right? Whatever, in the 5M is maybe even cleaner. Right, so again, there you go. Right, so clean touches like 1, 2, 3, 4. Again, what did we talk about? If it's not certain if they induced it, they did not induce it. If you have to guess if it induced it, it did not induce it. Okay, so you're still in the build-up. So guess what? If that's still the build-up, then this is a baby build-up in here. Right, something like this. Whatever, not the nicest one to the high side, in here, but this is again 1, 2, 3 touches, induces it to the low side. That's your structural inducement, not the break of structure. It's a structural inducement, right? Random A's popping up. So what is this? This is your SMT. This is your smart money trap in here because you're still in the build-up. You're still in the build-up in here. Okay, you did not induce it yet. So again, that's how they trick people in with the kochs. No, you need to wait for inducement into mitigation. Up in here, we draw it this for a reason. All right, again, where they come from, just to show you again. That's your point of interest in here. Again, that's your build-up, getting induced to the high side into the mitigation in here, right? And that leaves imbalances from here to here. That's also Asia midline. Perfect. That gives you the point of interest for this perfect build-up, inducement high into mitigation, and best scenario London open. But again, we're already very, very close to here. Now we're having fake break of structures and smart money traps. So that's even nicer as, again, smart money traders, they looking in here. What do we have in here? Build-up, induce the build-up, very clean. Again, you cannot miss that one to the low side. Structural inducement. We talked about that a lot of times. It's fake break of structures. Right? Guess what? That's why we have inducement before the break of structure. And there's not an inducement. Yes, you have your minor inducement, but not of the build-up. Right? Your minor inducement also was in here anyways. Minor inducement, no break of structure, no. But anyways, still in the build-up, fake break of structure into smart money trap. Here's your point of interest we mocked up anyways. Inducing smart money traders as well. They want to get induced as well, of course, right? They need their reason to get in. There they are, putting the entries in here, putting stop above here. So guess what? Juke them! Boom! Smart money liquidity out, and now look! Now it's obviously induced into the mitigation point we looked for anyways. Right, so let's see if we can refine that point even. We could probably. Right, so there you go. That's your extreme point of interest right in here. If you really want to run a limit order now, you can. That's the ones you can run. Okay, so did not tap yet. So you run your limit order right here. What's the target though? Again, you have this insane up run, Asia low, at least a target, or later on, again, technically you had this build up, that was your medium inducement, right? Build up, inducement, and one time frame. That's your inducement of the build up. There's your huge imbalances. That's your day open price confluence as well of the liquidity points. That's technically your overall mitigation target. For again, medium inducement, you want to trade away from that. Build up, inducement, that's your order flow entry. That's your technically order flow later on. Imbalances. And now obviously they're messing up all this. Price action, you're getting induced later. If it taps in here, trading away from the medium inducement. Mona, Lisa, shit. Okay, so technically, if you understand all of that, Intraday target 1 to 16. Not too bad. And if you really know what you do, that's the perfection target. 1 to 35. Not too bad, but didn't even tap yet. So we have to still wait. Okay. There you go. Tapped in. What a surprise! What a surprise! Oh! And chuped out of it. Okay. So what's the next thing we do? Simplicity approach. That's the push that led to the high. Internal break of structures. What's the push that led to the high? Again, will it come up to the extreme? It might be good. But what's the most likely possibility? That's the push that led to the break of structure. Right? Let's just apply the more candles right in here. Again, the upper ones. Right? And look how they always do this flip type of things. Right? Again, smart money trap, flipping it here, breaking the structure. So that's technically even the whatever supply turns into demand, that kind of nonsense kind of thing, blah, blah. For us, it's just a picture perfect build up inducement with timing, right before London open session into now internal break of structure. We had our clean inducement, not like in baby shit like that in here. No, build up, inducement to a low side, still in the overall build up to the high side with speed, with vector candles into a mitigation zone, relevant break of structures into mitigation. So where's your smart money traps? Obviously here, Asia low, all that stuff. You should know that, right? So guess what? Let's see. Oh, there you go. There's your tap into the mitigation. That's your re-entry right here. Same thing. Intraday target 1 to 12. Good target 1 to 29. Not too bad. Okay, so let's see what they do. Chup out of it. What a surprise. What a surprise. Again, if that's the smart money trap we had earlier, right? What can we expect out of it? Some sort of reaction. We're not really interested in it, but again, just for understanding purposes, there's your little reaction out of it. What a surprise. Oh, we're getting so surprised about what market is doing, right? Okay, so obviously should go lower. So we mark that up as a SMT, right? What's the only thing we look for though? LETs and EDMs. Right, we didn't have a let unfortunately yet, so we didn't kind of have an EDM as well. So if you didn't have a let yet, the EDMs off with no lets, they become a little bit tricky. That's again why it's let EDM and not like nothing and then all of a sudden EDM. So you need a clean EDM for the EDM to be very valid. Again, because the liquidity has to be touched properly. That's why the liquid equilibrium touch comes first, and the divergent equilibrium, okay, comes off the mitigation obviously. Right, so let's see. There you go. That's very nice for our sell positions, right? And of course, very close to Asia low, right? So again, Asia low, if it doesn't get swooshed, it becomes a smart money trap. Again, this scenario is we have this huge up run, down run already, right? We can expect again some false reactions out of it, and then we shouldn't get surprised if it pulls back and then doesn't smoke Asia low right away. If it does, it actually has Asia whipsaw characteristics, and then again, will it take out this high? Most likely not. Again, that's why the cycle variations becomes essential as well. Again, if this point in here already was a very, very nice mitigation area, okay, why? This should become an Asia whipsaw and then take out this high again. It's their interest to mitigate market properly anyways, deliver properly. So chances are very high that they don't take out this high in this day, right? Because again, they first want to complete their cycle overall, mitigate in here, and then maybe take it out, right? But not right now, creating an Asia whipsaw, and then they kind of have to take out this high. Again, that's the cycle variation, that's the rule sets, and you know how these rule sets align and should align all the time, right? So if we mean Asia whipsaw, just smoke through it is not really a good thing we should expect anyways, okay? So if you have weak hands, that's good points to partial out, because again, you will not hold through the pullback scenarios because you don't expect an Asia whipsaw. And again, New York trap time, London open is right around here as well, so you expect some falseness anyways, okay? With that knowing, Let's see if we made it up here. No, we did not. And also, again, build up vector candles, right, to low side. So technically, again, if you're really getting advanced, and again, now I'm talking very later, if you should know this stuff a little bit better, again, you identify your extremes, right? You identify your liquidity with the equal lows in here, getting induced. Again, this build up, building the low channel, vector candles, London open trap type of thing into mitigation areas in here, right? Again, nothing nice with nothing balances. So you take the overall zone. Again, that's Asia low in the first place, right? So you'd not be interested into refining it too much. If you really want to, then again, you have to take it like this, and then it tapped into the specular anyways. Nothing you should do. Nothing you should do at the beginning by any means, just to understand. Again, it would make sense to give a reaction. Here's your extreme mitigation of the vector candles, and you could run this thing upper, right, for at least some sort of liquidity grab in here, right? That is a possibility. Okay, again, just projecting things out. We have to obviously see what they're going on. But technically, that would be a hedge position. If you're not too happy, if you say, oh, that's literally a 1 to 29 potential. Okay, guess what? Let me hedge this trade in here just in case. Okay. But again, not the ideal scenarios you should do, but nothing wrong with doing it as well. Better scenario is to just partial out in here a little bit, just to get paid, don't risk a break even, whatever the potential still is insanely, okay? But if you know what's going on, you can obviously hedge this position as well, okay? Trading the cycle now to the upside. So let's see what they're trying to do here. Okay, messing around, but we already can see. Simplicity approach, build up. Again, here it doesn't really make too much sense to project it up because you already can see it broke it kind of in here, right? But let's just say we did. It would look something like this. Okay, 1, 2, 3, 4 touches, but here 1, 2, 3, 4 touches as well. Okay, so let's see when they induce this build up. Give the fifth touch in here. Okay, so what's the structural inducement? Right in here. All right, so again, that keeps you, there you go. Now this buildup is induced to the high side. Structure point is induced to the high side. What's technically next supply demand candles right in here. Okay. So entry helper, nothing really, right? What's the timing? Magic manipulation minutes. Not really cleanest magic manipulation minutes, like a little bit off. That's the wrong line in here. Should be 10:30. What's the timing though? 10:50, so a little bit off timing, okay. Still kind of in the time window, okay. But again, nothing we should be interested in other than to do what? Simplicity approach, build up, inducement, structural inducement into mitigation, relevant break of structure. Here's your extreme, right? That's your extreme. Mitigation, right? Then guess what? Next thing would be smart money traps. Obviously, now this is a very easy smart money trap protection here, right? But guess what? Rolls over equilibrium after a break of structure, comes back, right? Perfectly fine, right? So let's see the 5-minute maybe for additional confluences because we're still looking for our lets and everything like that. Oh, and there you go. What a surprise. 5-minute let also of a structural inducement into a baby cycle. Okay, you have a 5-minute let. That's your internal break of structures. There's your extreme mitigation. That technically would have been your short trade. Again, this hedge trade is out of it. 1 to 8, not too bad for hedging. Same thing. Whoopa. Internal target 1 to 7. If you know what's going on, 1 to 20. Not too bad. Not too bad. So let's see how it runs on a 5-minute. Just is out of it. Lovely, lovely stuff. Look at it. Look at this go. That's the trades you want to be in. Literally. That's the ones you want to be. How gorgeous can it be? How clean can it be? How amazing can it be? Like seriously, like it's what can you say at this point, right? So now obviously you have this huge down runs, new down runs. You're in the vector candle stage, right? So you already know, okay, things look very interesting because you're vectoring down, pullback, vectoring down. All right, next time window is still a little bit off. It would be New York trap, New York open, and then New York trap. So New York open is right here. So you still have a lot of time left. Okay, so you shouldn't get too freaked out about it. Everything's good. Okay, look what they're doing, building up liquidity. And oh my God, you already can see what they're doing. That's our point of interest we chose earlier, right? Based off the build up, inducement, imbalances. That's your candle right here. And look what they're doing. Building up liquidity right above our point of interest. Okay, but then again, this is not LETs you should look for. No, that's why again, you always need the proper inducement, build up, inducement, breakout structure, mitigation, smart money trap, timing, LET. Now at this stage, you have nothing. Okay, so you can literally put it away. Now you're in the build up stage, right above this point of interest. All right, so guess what? You wait for build up getting induced. Simple as that. Look at this. Quadrillion bottoms to the low side. Every support trader is getting a boner right now, okay? Excuse my French, but you know what I mean. And there you go. Chooped it. Choops into it. What a surprise. Timing right around the corner. New York open. Choops it, right? So what's the next thing we look for? Timing. Boom. Okay, if you have a limit order running, technically that would be it. For my taste, is a little bit too big. That's what she said. But anyways, you know what I mean. So not really a limit order you'll be interested in because it's too big. Again, we still refine it on a 1 minute. It's just too big. So if you really want, you could. Limit order, already tag it in. But there's probably better entries anyways. So what do we wait for? Simplicity approach. You should know that. Internal breakout structures giving equal highs in here, which again, sometimes can be nicer. That's your extreme point of interest right here. Right. Wait, is that a wick? No, there you go. That's your extreme point of interest. Entry helper. Okay, not really anything. Completely fine. The LET technically was earlier with this inducement, so the inducement become the LET. Okay, so if that's an extreme limit order, completely fine. Stop is just down there. Perfect. Okay, so let's see. For additional confluences, timing to the absolute minute, New York open, not New York trap. This time is New York open. Okay, sometimes I do that as well. Okay, taps in our better trade now. All right, so technically that's your Mona Lisa trade. What's the potential target you're looking for? Right, depending on how far it is of the day. Right, or technically of how you see the overall picture. That can, of course, take out now this high, right? Or if you zoom out on M5, what's your next liquidity target other than the daily high? Again, you're still running away from the medium inducement in here, right? Next medium inducement would be Asia high in here. We even marked it up for this day. Okay, but technically, this can be your trade. 1 to 30 again. Are you kidding me? Okay, right after extreme. That's a possibility you can do. Okay, for sure. Why not? Right? So let's see on the 1 minute though. Let's stay on the 1 minute to see for additional confluences we have. Okay, so we technically had our extreme LET, but not the nicest. So again, now we take making it low. If you get a breakout structure with a LET, that's 10 times nicer. Right? So there you go. Kind of this one already was. Okay, perfect. So again, technically this was your LET. This is your 10 times nicer LET. Okay, and there's also our trade we have taken with the LET in here. Okay, so that's your 1 to 30 potential and be out of that trade. 1 to 20, 1 to 35. Not too bad. Not too bad, I would say, right? So again, acceptable for sure, right? Okay. So let's see though our next confluences. First of all, we're having our internal break of structure now. Okay. So let's see. That's again the cleaner one with all the equal lows built in here, right? Equal highs built in here. That's again the push that led to the break of it. Finally, we have speed, momentum, left imbalances. So if you look for EDMs, that would be our ideal Mona Lisa point in here, right? Something like this, right? That's again the Mona Lisa trade if you get it. Okay, again, first we had the extreme mitigation, not too bad as well with the let of New York Open, right? But let's see what they're trying to do, what they show us, and you should see what they're doing. Build-ups, 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 building up the channels right in here. Look at it. 1, 2, 3, 4 touches. 1, 2, 3 touches in here. Okay, so build-ups right before New York trap time. Okay, so first of all, though, we're having again this build-up kind of inducing structure. Okay, to here. Again, that's why you can trade these micro trades or micro cycle, whatever, mini cycles, whatever you want to call them, right? Baby cycles. You understand? Okay, that's your Mona Lisa point of interest anyways. You have a structural inducement here. You're in a build-up. You want to induce the build-up below. This kind of looks like a vector candle into the structural inducement. Okay. Now you could have baby cycles inside with an internal break of structure. Again, if you're really getting bored, that's a trade you could take. At least until this area. Okay, so that's your limit order. Understanding that you're just trading a pullback cycle into these areas. 1 to 5, just for fun. not too shady, right? Okay, there you go. Interesting. Taps in the extreme, also being some sort of let. Okay, what's the timing? New York trap time. Okay, you're just trading the pullback cycle. Nothing you should be too excited about it. Nothing you should be technically trade all the time, but it works tactically all the time. Okay, so now you can see, okay, maybe this buildup is something like this. Okay, from here to here to here, 1 to 3, and there's a too low side. Okay, sometimes you have to adjust it a little bit. Okay, completely fine with that as well. That technically is your order flow entry. Again, this is your inducement of the structure, still in the build-up stage, right? Structural and break of structure into mitigation, imbalances. That's your let. That's your nicer let if you prefer this one. Again, that's your low lows. That's your order flow entries right in here. You can trade this stuff in here as well. As again, just for hedging positions if you took this trade anyways, right? Again, that's nothing too bad anyways. As long as you understand you're looking for buys in here for the overall picture, why not take the pullbacks as well? Again, some point you will be able to do that for sure, right? But first focus on the clean stuff and then I'll focus on the pullback trades in the middle. Okay, and there you go. Clean inducement of this build-up now, right? Structural inducements already been taken place now. Perfect. Okay, so if the Mona Lisa scenario hits, this in here, this point will become EDM. And we already can see this point in here, and this point in here are already very similar. So if price action hits inside here, that will be our EDM trade we were looking for at the whole time. And that's how the shit will get serious. Okay. Same target as the low one. What is it? 1 to 20. Okay. So let's see. Limit order is placed. TPs for there. So we're getting out and in. Boom. Like, what can you say? What can you say other than celebrate? How random is the market? And think about it. You are in a position right now in week 5 where you understand all of that. Isn't that absolutely insane? Just think about that for one speckle. Okay. So we're having the EDM trade, as you can see here, That's the EDM trade we expected in the first place. We took the pullback trade inside here, having literally 1 to 8s and 1 to 5s in between. Having this position running with potential of 1 to 30. And now opening another position with a potential 1 to 20. Isn't that insane? Like, seriously! Let's see what they're doing. You already can see what they're doing in here. You already can see it. What is it? Build-ups. New build-ups. What is a price? So what do you expect? All right, first of all, equal highs in here. All right, so okay. Induced equal highs, still in the build-up, to go lower. Inducing the channel to the low side. All right, so what's technically the order flow? Order flow would no, that's the extreme order flow. Whoop. So that's the extreme. We expect order flow though. So order flow. Oh my god. Let me catch that. Come on. There you go. That's your order flow right here. Induced out of the channel. Again, we don't expect the extreme, we expect the order flow. Right? And if that hits in London close, that's also a possibility. But again, there you go. There's London close. Let's see. They missed it. Okay, it's fine. Completely fine if they do. And yeah, that's how the day technically ends off. Oh, comes even back in here. That's even super, super nice. Look at it. 1, 2, 3, 4 touches, build up, inducement into mitigation. So if you really wanted to take the full potential out of this point in here, extreme, again, extreme limit order, extreme mitigation, EDM trades, London close, also kind of not really EDMs, but let's just take it. Big potential as well, 1 to 20, not too bad for re-entering the trade. So let's see how the day ends in here. It's very late for the day though. So just let's see what happens. Okay. You can sleep like a baby. There you go. That's technically how this day ends as well, right? And how crazy is that shit? We took fast and furious rate 1 to 6. 1 to 6. This perfectly London trade in here 1 to 35. Right? And this one 1 to 29. This one 1 to 8. This one 1 to 20. This one 1 to 30. Like potential. Technically now we're running intraday targets only again Asia midline. Intraday target got taken out to the speckle. So if again you're intraday trader only, your targets would have been here and they would have been hit right now with 1 to 20. Not too bad at all. But as you understand the bigger picture, you want to take out medium liquidity. We just leave them on for the next day to see what happened. Okay, so let me end this video as well, just to stack up the videos, and we do another breakdown of the breakdown. Again, no cherry pick shit, as you can see. Let's look at it. What is going on? What's going on? Okay, so let's close this video, make one other day, and then I think you're ready to conquer the universe. Okay, so let's get the last day of July going. 29th of July 2022. Okay, we had this juicy extreme mitigation entry, 1 to 30 potential, 1 to 20 potential with the let or EDM, and the London close entry of another 1 to 20 possibility, right? So we had the target in here. Overall, we could have even aim higher, like all the way up here with all these quadruple tops in here, right, to take these out also. But let's just not get too greedy and just aim for this one, because I don't think anyone will complain about 1 to 30 and 2 1 to 20s, right? But first of all, we have another day of July, right, the last day of the month. So let's see if we will make any excuses for it's the last day of the month, things are wrong here, or if everything is literally exactly the same all the time. Okay, so first things first, we wait for Asia, and we already can see that we have a build up in here, inducement low of the build up to go higher, probably, right? There you go, right? Another build up, inducement low to go higher, and all of a sudden it is cheap. What a surprise happens. It's still Asia. We're not too keen about that. Okay, so now obviously look what we have. All right, first of all, let's see if we can make some sort of sense into there. All right, we have this overall big build up. Okay, not the nicest one, so let's just not even draw that. All right, so what do you have? This overall huge channeling upward, and now momentum tries to kick in of Asia. Is that really something we get interested in? Not really, right? But what do we see instead? Right, this crazy equal lows in of Asia, right, and then this fake move in Asia here with speed. Okay, so we wait. Next time winner obviously would be interested in doing something is Frankfurt. Okay, so let's just wait what they do. And again, one possibility would be a faster than 2 years trade. And look what they're doing in here. Okay, so they're giving us a little channel build up already. Okay, which is really nice. We will not start, not say no to something juicy like this. All right, where's my mouse? There you go. So again, if you have a nice channel build up in here, again, we already can take a look at the M1 and say, okay, still okay, nice fancy fake vector candle in here, architects, but we're not getting faked out by that. Okay, let's say this is the build up still inside here, right? Again, if you want to go higher, you want to induce the build up in what direction? Low. Exactly. You want to induce it low to go higher. What's the next structural point we want to induce if you want to go higher? Something in here. Okay, so let's see. Build up getting kind of induced, and now structural point getting induced also. When do they do it? What a surprise. Only Frankfurt open to the absolute minute. We never induced out of Asia high yet, so that's characteristics of fast stepping 2 years straight if it gives it to us. Okay, so next thing we would look for some sort of internal breakup structures into mitigation. There's your internal breakup structures, right? So if they give you some sort of mitigation in here, then you can take a buy trade into, okay, there we go. What a surprise. If you have an entry as well, entry up, or no, we don't. Completely fine. That's your fast stepping 2 years trade to start off the day with a very juicy trade as well. Only 1 to 4, but again, let's see. We understand what's going on M5, right? And have the same target, or even let's just only aim for Asia high, yesterday's high in here. Okay, that's also possible. Then we have 1 to 7 in here. Okay, so that's completely possible overall. Okay, so we're still having these positions, so technically this is also a target you could aim for overall, right? Or again, we have this liquidity target and this liquidity target as well, all the way to the high side, away from the medium inducement. Okay, so that's all possibilities for this play. Again, it's best to aim for the next liquidity target and not aim for the fences, because chances are that you aim again, they're playing these cycles inside these cycles. They're just getting a break even. You should not do that. So aim for the next liquidity area. So best target, or like most realistic target, Asia high inducement. Next logical target is the inducement of yesterday's high and form a medium inducement. Okay, that's obviously the Mona Lisa scenarios we have in the scenarios. Okay, so let's just wait what they do and if they play around. Okay, first target already hit. Right, so let's see if they give us the medium inducement, and shoot, what a nice medium inducement they give us. Okay, so now obviously things start to look very juicy. We have this build up, fake vector candle, now proper vector candle into the medium inducement. We're having our first trade done with 1 to 7, gives us a very nice buffer for the rest of the day. So we can take a few risky trades from now on. Okay, so guess what? We have to wait. There you go, goes even higher and higher, and what a nice potential that has been, right? So now we know, okay, this is the extreme. This is our extreme mitigation after completed cycle. Medium, oh, it even goes here. So surprise, surprise. 1 to 30 hit, 1 to 20 hit, 1 to 20 hit. Okay, not too bad to start this day off. Okay, so all these trades having hit TP, even have this TP in here as well. Okay, so not too shabby. And again, that's literally majority of trades. Again, we literally have taken as well, right? So again, I'm not so surprised about all that stuff because of course we were in a lot of these trades already, right? Okay, but anyways, just saying, now we're having this medium inducement, right? We want to trade now away from. Again, we have this crazy ass up run in here. Targets are hit for now, right? Overall targets are still in place. Like again, we're not having trades running, but again, we know that price action should take out this crazy liquidity in here as well. But for now, we're having a medium inducement to the high side. Okay, we know that. We want to trade away from that medium inducement. How can we do it? Just again to speed run through it. First of all, internal break of structures in the 1 minute. Because on the M5 it doesn't look really nice, right? So let's say this is the push, internal break of structure already done. Okay, perfect. So let's see. Or let's just stay in the 1 minute, why not? Again, nothing really you can refine here. There's no imbalance zone, there's no imbalance zone, there's no imbalance zone. So that's just a 5 minute point of interest we marked in here. So let's see. They come back and give us a juicy entry. Maybe with a let, not quite of yet. There you go. That's your perfect let. When does it happen? What a surprise. London Open to the absolute minute. Okay, are you surprised at this point any longer? I don't think so, right? So stop goes right off the extreme mitigation. You know what I mean? Medium inducement mitigation. There you go. Perfect. So what's the target? Asia low to the normal target for at least this medium inducement trade, right? We can aim lower as well, but we can wait for obviously confirmations lower, right? Next target overall to low side would have been, again, order flow into this medium inducement target in here. And again, the only thing we would have left is some sort of order flow in these areas, right? And again, you should not pull something out of your arse because again, it could be this, could be this, could be this, could be this. Best case, you just wait. That's why you also shouldn't aim lower in some sort of areas. If you really want to do, then at least in here. But again, for this, if it's not clean at all, aim for Asia low because guess what? You have an Asia low anyways. Crazy ass liquidity. So again, that's a very good target. Only 1 to 6, completely fine. Okay. If you want to take a re-entry, is also possible, but just stay in about M5 to see what they're doing. Okay. So first of all, just giving us an M5 let entry in here as well. Okay. And by the way, a few of you guys took these trades. I'm very happy about to see that, right? Because that's literally Mona Lisa shit, and very happy to see that a lot of you guys are already jumping in these trades, right? So lovely stuff. Anyways, but now we're just having, obviously, there's some sort of build up in here, right? Having some sort of build ups. We're looking for inducement of this build up to what? Okay, in this sense, to the high side, okay, into order flow mitigations. Okay, kind of did that already, and then goes lower what a surprise, fakes the smart money trap, right? Messes around, gives a false reaction of Asia low, just to do what? Boom. Take it out. Target hit, 1 to 6 done. Technically, this is a re-entry, right? And technically, use a re-entry in the M5 flat as well. All possibilities, perfect. But this cycle now could be done because now we're having this minor inducement of the Asia low. Okay, so we're looking for reaction out of it. What's the next structural inducement they would aim for? Right here. Okay, so let's just spend a 5 minutes to speed run through that one a little bit. Right, so smart money trap in here, order flow trap, right? False reaction into inducement. What a surprise. And now again, we can look for trading this lower into possible order flows in here and then aim higher for possible targets in here. Okay, so let's see what they give us. First of all, this inducement high, okay, goes even way higher. Interesting. Now we're looking for re-entries of this inducement, maybe from the extreme, right? Or if you go to the M1 to see for additional confluences. So we have our internal breakup structure. Perfect. So let's stay in M1 for now. See what we had. Okay, in this scenario, not really anything. Okay, so it's completely fine to take some sort of let trades in here, continuation trades off of here. If you don't like that, again, into some sort of mitigation, into breakup structures, into mitigation here, off of Asia high as well, in here, could be also potential re-entry. Not the nicest one, right? But sometimes we just have to trade what is there. Okay, so we have this crazy up run, inducement of structure to the high side, low. Okay, this is kind of a structural point, giving some sort of lets in here, internal breakup structure into order flow in here. Okay, if you wait all for the way extreme, that's done. That's the only entry opportunities we had in these scenarios. Okay, so nothing too crazy. Okay, and then obviously makes new low lows. The only thing we wait for is technically lets. Again, if we said that is the let, not the nicest one for sure, but let's say this is the extreme in here. That would be your let. Okay, just for argument's sake, let's just put this one in here. Okay, you aim lower. How low, you don't know as of now. Or you just let this live a little bit unconfirmed TP in here, right? Because you need to wait for the next cycle for knowing when the reversal should come. Okay, then again, internal breakup structures in here, into mitigation, perfect, and then obviously lower. The next thing you look for is EDMs. Okay, so technically that's your nicer lets. Okay, nothing really you should take or should be interested in too much, but technically that would be your lets in here, right? So let's see what they're doing. Giving now the EDMs out of here. Again, nothing I personally would be too interested in. Just for argument's sake, this in here, again, this is kind of the let, this is kind of the EDM. Everything would be there. Definitely not the nicest play. What do they do on the other side though? Building up, of course, this down channel in here, and we're just waiting for it to get induced right here. So now the channel is induced to a low side. This play is done with the let and the EDM. Again, not the nicest ones, but now we can understand, okay, this could be done in here as well. Again, chances are that you kind of missed that one, but just to show you what would have been here with the let and the EDM, not the cleanest one, both of them. Okay, so just for argument's sake, like we missed them. Now, timing, absolute perfect though, right? New York trap to the minute, inducing the channel to low side. Okay, so what's the only thing we're looking for? Of course, some sort of inducement to the channel. We already had it, right? Then we're looking for clean breakup structure to the high side. Okay, so let's see. Faking, 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 faking. So you're not too interested about that. But what do you have instead? And let. So now the only thing you have to do is, again, sometimes that is the way you have to do it, is, you know, this is the build-up. That is the inducement of the build-up with timing, and it tapped into this inducement, into mitigation, left this little point of interest in here as well. Because you understand that, because you know the cycle here is completed with the build-up, timing into the inducement. The only thing now you have to find if this a POI that makes sense also. So you had here the equal lows. You had this point in here, right, with the imbalances left, and with a little build-up before it as well. So if it taps in here, which it did, that could be a potential point of interest. You say, okay, that could make sense because the build-up in here is done, timing is done, cycle could be completed. Now I'm having my let in here with timing confluences. I never had a break of structure, but that's a risky trade I can take. Okay, so again, sometimes it's not clean. Overall it is though. And then again, target is still this one up here, right? The medium inducement we had marked up earlier, right? But that is definitely a risky trade. The more safer trade is to wait for what? Internal break of structure. Again, everything is based off of the completed cycle. Again, we have this inducement high, inducement of Asia, comes back into structure high to go lower. Now build up, inducement, into timing aspect, into some sort of valid point of interest. You're getting to the left. Again, nothing you would ever run a limit for because it's not clean. It's just the point of interest is for your understanding purpose that you can run this let entry in here or break of structures after, because you need some sort of at least a medium inducement or minor inducement to the left, right? And then into mitigation. In this scenario, you had a proper mitigation of order flow, which makes perfect sense as well. But again, you don't pick like, oh, let me place a limit here or here or here. No. Wait for the cycle until it's completed. Wait for timing to kick in. Wait for your let, and then look to the left if it made sense for point of interest as well. You don't need to limit orders all the time. Again, if it's clean, like for example in here, it makes perfect sense. But in here, it's not clean in here, so you just wait for the cycle to be completed. Then lock in the point of interest to confirm everything that comes after, okay, to give you more confidence and more confidence. Now you have the let entry extreme mitigation of the inducement, of timing. Perfect. Again, if you don't like that still, completely fine. You wait for what? Internal break of structures right in here. Okay, so perfectly fine. Where's your point of interest? In here. Right? If it taps in, there you go. If not, then not. Again, if you wait for clean lets, could be a possibility as well. Not really in here, but what is that? Build-ups in here, right? And taps into boom. Perfect let entry in here. Right? Again, not clean at all. You could say, oh, what about this wick? It's completely fine. Sometimes it's not perfectly clean. That's why you trade what's there, not what you wish would be there. Okay, same thing. Is it worth to risk for a 1 to 20? Fuck yeah. Okay, so let's see what happened. Not too bad. Not too bad at all. We already can see what they're doing. As always, the same shit. It's always the same shit. Do you see it? Do you start to seeing it? It's always the same stuff. That's just, again, it's the same thing as we had the day before. Again, check the video before. It's the same stuff. Structural inducement of Asia, midline would be here. If the build-up getting induced to the high side. Again, boom. Still in the build-up, but induced structure of Asia midline in here. Okay, so guess what? We had the same things all over again. Check the previous videos of the same format, right? If it gives an internal break of structure, or even here, we can trade the pullback because we expect anyways to give us an EDM of the next price action point. Again, no imbalances, no imbalances, no imbalances, no imbalances. Yes, imbalances left. So you wait for the next imbalance order flow into EDM trades because lets are done. Okay, so now we have this pullback cycle. Build up, structural inducement to the left, internal break of structures. Again, we had the same exact play the day earlier. If you check the other recording again, boom, taps into it. What is it? A let. What is a price? So you can trade this pullback trade into in here. Again, it's not a good trade. I'm just telling you how you can do it. Right? Only 1 to 4 gives a shit, but it's technically how you can do it. Okay. So nothing crazy anyways. Again, if it comes back and gives you break even or whatever, not even sure if that would be a break even. Probably not, because it didn't even break anything yet. So again, it's just a pullback 1 to 4, but you can do it. You should understand why that is. And guess what? This build up getting induced to a low side now. This is more equal lows, right? And now getting properly induced. And if you get an EDM in here in our zone, surprise, surprise, we're having an EDM in our zone. You can take this. And that's obviously the preferred direction anyways, to the high side to hit the final target, right? Again, taps in, is an EDM, boom, out of it. That's all you need to do. Madness. And then you just wait. Wait until your target's getting hit. Again, not the cleanest day, but it plays perfectly alongside with the rest we did. Look at it. Insanity. Absolute insanity. Okay. And let's just wait. Let's just wait what happens if they actually aim for the liquidity. Build up, right? Inducement low to go higher. Build up, channel high, inducing low to go higher. Right? It's the same stuff all over again. Guess what? Build up, right? Perfect. Structural inducement, right? So that's your build up. Here's the inducement low, structural inducement low side. Again, still away from all that stuff. Into what? Building equal highs in here, but guess what? It's completely fine because this cycle is completed because it induced to the high side, still stayed again in our bigger time frames target. But guess what? Medium inducement. So we know this cycle here is in forward direction. But then guess what? We look still for the upside because again, this August right here, right? So you have this EDM trades, right of Asia midline. Okay, what a surprise. Is that something you can trade? Yes, for sure. Right? And guess what? It should go higher. Should not get shaked out here. And boom. What does it do? Even gives you internal break of structures. Comes back to what? Mitigate in here. To come at this. But obviously now it's getting very late in the day. So guess what they're doing? Building up the quadrillion top in here. Right? So guess what? Next day. And wait for the next day. Inducement low of the build up, channeling up, inducement low. Boom! Target done. And now this becomes your medium inducement. It happens in Asia though. So what do we expect for the next day? Obviously to be what? This is your medium inducement of this craziness. So we expect in retail heaven. Or we don't expect like London to induce, to reverse. Guess what? You expect obviously price action to go down. You don't expect a reversal in here. You expect a continuation lower because this is your medium inducement. Trade away from that. That is how you do it, ladies and gentlemen. That's how you have to do it. And guess what? It's all about practice, 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 and repetition, repetition, repetition. And all these trades you should understand by now. Rewatch these videos if necessary. Don't get faked out by this quadrillion tops in here, right? And guess what? See the reaction of the build-up into obviously structural inducement, right? To go higher into the tube, into the medium inducement. Then it's in Asia, so you expect obviously trade away from that in here. So that's not a reversal trade you look for, right? Easy like that. So rewatch if necessary, but week 5, showtime, okay? So get used to that and make something out of it. So enjoy, revise everything you have so far because you have a shit lot of material so far. Don't rush it. Refresh everything. Get used to it. Again, get used to all these entries in here and make something out of it. You have everything and more at this stage to become an insane intraday master. Intraday Wonderworld gates open right to you. This material no one else has. You have like a very high privilege to have this some sort of knowledge. Look at it. Who else has knowledge like that? Now you have it. Make something out of it. Okay? So see you in the next videos. And you made it! Week 5 completed, and another crazy week in the books, isn't it, huh? So we covered a lot of intraday mastery, and as you already hear the clicking noises of the wizard Cam making nice in the background, Zuck was in the house as well. So we give you like a quick summary and task video, because overall week 5 was a lot of cup trade, solidification, special trading, in-depth simplicity approach, examples, overall a shitload of chart examples on the edge, intensive training, and yeah, overall getting the content really deep into your mind and the brain, which is obviously very good. But for week 5, you obviously have to complete a few tasks as well to get it even better into your mind. So, Cam, what are the tasks the legendaries students have to do for week 5?
Obviously, week 5 was the consolidation week. So we want you to use week 5 to reflect on everything that we've covered so far. So if you're not feeling confident on not even necessarily not confident, but you don't feel like you've got it down as much as you should have, you can go back, watch the videos, they're there. That's the whole reason. There's nothing shameful about going back and rewatching things. It's much better that if you don't understand something, you're actually honest with yourself and you're like, okay, I don't understand this as much as I feel like I should. I'm going to go back, I'm going to look at it, I'm going to make sure that I do grasp it. So that's really important. Obviously, I've covered the first and the second point. So it's absolutely fine to go through the content if needed. And then
not only fine, also sometimes it's kind of necessary, right? If you feel like,
100%.
Okay, maybe this topic, maybe I rewatch it. Again, it will not harm anyone. Like, again, as Cam said, like, why would it be a negative thing at all? Like, it's a good point, right? If you go back, whatever, again, even if it's in week 2 or something like that, okay, maybe you want to understand even Enigma better and you want to go all the way to week 1 again to rewatch, it's completely fine. And then if that's for your understanding to really build that perfect foundation of like solid understanding and knowledge before we then work in the next week on your pure foundational mindset and mind-based understanding also, right? And then you combine the logic with mindset, and then obviously things will start ready to align perfectly fine. Before you can do that, just make sure you understand what we covered so far, because oh man, we covered a lot of stuff. Like at this point, I don't even know how much hours it is, but every hour is more than 10. Every week has more than 10 hours of content, so that brings us minimum of week 5 when you watch this video of 50 hours of content. Just think about that. There's a lot of stuff going into the mastery and whatever. Maybe there's some point you maybe want to rewatch. Other than that, Zuck, but what else should they do for week 5 tasks?
So the next point is pick your cup trade and the session you want to trade in. So now remember your cup trades, that's your London Cup or your New York Cup. Again, it depends on where you are in the world of what you would either choose, or if you can do both, that's even better because you get the most opportunities out of it all. Again, the sessions also includes the element of timing. Maybe you can also get up or be awake for Frankfurt Open as well as London Close, and you have the other timing sessions with the M1 and 2. So again, if you can make them all, why not? If not, again, create a routine and a timetable based on the cup trades you can trade in. So it's important you pick that up. And then the next one is pick your entry approach and mark up 15 entries with it. At minimum, should I say. So again, your entry approaches, that's between 1 and 4 if you like your extremes, the entry helpers, as well as EDMs, whichever one you want to choose. Again, choose which one, or if it's more than one, then choose between 2, 3, if you like them all, why not? But again, you have to mark up 15 separate entries, so that could be up to 60 entries marked up in detail with your preferred entry approach, or approaches, should I say. Now, the next point would be show 3 live executions with your chosen entry approach. Now, this would be in the live market of showing exactly how you got into the entry. And it's important also to mark up every element of the lit cycle. Don't just mark up the entry itself, mark up all the relevant build-ups, again, the inducements, and then the mitigation. Now that will be dependent on your entry approach specifically. Now, these are minimum amounts, so do, of course, try and aim for more. Again, it's for your own benefit. You don't have to do just 15. That's what we just advise you as an absolute minimum to do. Now, if Reen, you want to cover the last 2 points.
Sure. So, of course, full 5 marked up M5 charts. Again, as Sokpa said, absolute minimum amount of, I mean, at this point, you should have already way much more fully marked up charts anyways, right? It's just repetition, 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 in that order and in that speed, right? So, and then show full up marked up simplicity approaches. Again, simplicity approach is one of the most effective approaches you can use because it just provides you with entries technically everywhere, right? Very solid entries also, right? Not only cup trades, but they can technically be everywhere. And if they align with timings, entry helper, also then even 10 times better. So yeah, Cam, that brings us to the beautiful week 5 content completion in that sense, right? Next week, mindset and psychology will be a fun one.
Very
and then
fun.
you're in for a treat for 7 and 8 as well. So I hope you enjoyed week 5. Definitely a lot of nuggets in there, a lot of good content. And yeah, do the tasks. They're not too crazy for this week. So slow and easy tasks so you can move smooth into week 6. And we catch you right there.